This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
I don't hear too many bullish cases for China in 2025.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Trump took steps on everything from TikTok to the southern border.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo, Paul Sweeney at Bloomberg Invest downtown today with Alex Steele. Thrilled that Jess Menton could be with us today. She said, I'm not coming in unless the VIX is over 20. With a VIX at 23, spiking out to a 24, near 25 level. Yesterday, the equity market's a barometer for all this news flow.
That's right, and the S&P 500 posting its worst day of the year yesterday, down 1.8%. But I'm wondering whether or not we'll have a turnaround Tuesday here, Tom Keene. You're looking at equity futures here for the S&P 500, NASDAQ 100, pretty flat right now.
You gotta be kidding me. Futures -7, a little deterioration at the tape. We will do. Lisa Mateo walked in total tantrum. She said, we're doing more data checks today. I said, yes, we are. We'll get to Lisa in a moment. But futures right now, -9, and that VIX 23.08. I can't describe the news flow. And for those of you across the nation on your commute, good morning. Good morning to the tri-state area. Bloomberg 1130 down to 99.1 FM in Washington and 92.9. from Mount Katahdin to Block Island. Today, the news flow, absolutely extraordinary. There's no other way to put it. This is an historic Tuesday. We have a joint session speech by the president tonight. As you just heard Professor Schiller of Brown University say, there'll be a lot of explaining to do. We'll try to give you that conversation. Abby Joseph Cohen will be with us. We're thrilled to bring in Jean Boivin from Canada and with BlackRock. Really, I think our interview of the day. I'm sorry for that, Dr. Cohen. I'm sorry. Abby Joseph Cohen's our interview of the day as well. The really important data checks this morning with the dollar weaker. From the Interactive Broker Studios in the Bloomberg Business Flash is Lisa Mateo.
Yeah, let's get right to it. Right now we have futures lower. This is as President Trump's tariffs on Mexico, Canada take effect with added duties on China. Right now we'll start with NASDAQ futures down 0.1%. Same for Dow futures. S&P futures down about 0.2%. We go over to the 2-year yield, 3.91%. That's down 3 basis points. The yield on the 10-year, 4.15%. And that is little change. Stocks in Europe retreating. Concerns it could be next to face U.S. tariffs, weighed down by automakers, energy stocks. Then we go to Asia. Chinese stocks mostly lower after the country announced retaliatory tariffs. We move over to the currencies. Have to point out the Bloomberg Dollar Spot Index fell for a second day, down about 0.4%. Want to check in with the Mexican peso right now because it's down 0.3%. We have the Canadian dollar up 0.4%. We move on to the euro. It's up about 0.5%. That actually rose to its highest level since February 26th. Tariffs, the potential of further export restrictions, that's on the mind of investors when it comes to NVIDIA. Yesterday, those shares fell nearly 9%. They're starting to rebound now. They're up about 0.2%. Then you have kind of this mixed bag when it comes to automakers. For example, Stellantis down 2%. You have Tesla down more than 1%, but General Motors down 0.1%. Ford is up 0.2%. And tariffs affecting earnings at Target. It was among one of the reasons why it warned of meaningful pressures on profits in the coming months. Its CEO actually warned price hikes in the coming days due to those tariffs. But shares right now, they're up just over 1%. That is your Bloomberg Business Flash. Over to you, Jess and Tom.
Lisa, thanks so much. Just Menton in for Paul Sweeney again. Bloomberg Invest, the Shonali Bassick effort. Lots of really good conversation. And I'll be honest, folks, the conversations at Bloomberg Invest have shifted because of what we've seen in the last 24 hours. Let me get the list of guests. The team has been working on this all night with the news flow. We go from Barbara Reinhard into Abby Joseph Cohen. That is spectacular. In the 9 o'clock hour, Carl Weinberg will be with us with all of his perspective on international economics. Gregory Dacko joins us right now. He is with EY Parthenon. I'm sorry, it's Ernst & Winnie, Greg. I'm going to go back to my ute on that. Greg, what is the agony of the combined tariffs and the response from these three nations, China, Mexico, and Canada? How do you quantify that?
Yeah, I think we certainly cannot underplay the potential drag on economic activity in the US, in Canada, in Mexico, in China, and in the rest of the world as a result of the spillover effects. You're really talking about imposing tariffs on $1.4 trillion of imports. That's massive. That represents about 5% of US GDP, just to give you an idea. The shock, when you filter that into different types of models, is likely to be quite large. You're talking about a loss of over 1% of GDP in the US relative to a given baseline. Right. And for our trading partners like Mexico and Canada, you're talking upwards of 3 to 4% in terms of a potential shock. So this is recessionary for North America.
There's the key word, folks, is what does it do to economic growth? Carl Weinberg in the 9 o'clock hour with a blistering note this morning on the apprehension ahead. Here's one statistic, folks, just to give you an idea. Good morning, Cozad, Nebraska. It's where I used to fill up the gas tank a few years ago. 20% of Nebraska's global goods exports, 1 in 5, went to China in 2022. Just, these kind of statistics are jaw-dropping. And of course, I would suggest that's a very Republican state. Mr. Trump's going to get an earful from the legislators of Nebraska. The Yale Budget Office, Greg, came up with a 0.4% GDP long-term statistic if this folly continues. I take 0.4 divided by a run rate of a 2.5% real GDP. Can I state that maybe somehow all of these actions are a 16% decline in our real economic growth?
Well, it's certainly a real risk, not just in the short run. I think you point to a great element here, which is the supply side conditions. We've had very positive supply side dynamics that have lifted the U.S. economy's growth potential. And that's been one of the key factors that has been driving this U.S. exceptionalism. It's not just that we have grown at 3%, but it's that we've done that with a disinflationary trend over the past 2 years. And that's been driven by solid capital investment. It's been driven by outstanding productivity growth. And those factors are at risk if we are to be in an economy that is more closed, where the cost of goods are higher, where inflation is higher, and where you risk that stagflation environment, that bad word that nobody wants to hear, certainly not the Fed policymakers, where you have economic stagnation and high inflation. It's a real migraine for Fed policymakers, because do they react to the higher inflation but curb growth, or do they support the economy but risk a de-anchoring of inflation expectations? We know a lot of Fed policymakers are really focused on that. I was moderating a session yesterday with St. Louis Fed President Musalem, and that was his key focus. We have to make sure that inflation expectations do not get unanchored in this highly uncertain environment, because that's the key risk. In addition, is that there is volatility that filters onto financial markets.
What do you make of when it comes to the Atlanta Fed model? Obviously, as you know, got updated yesterday and contracting by potentially 2.8% after it was already revised lower by 1.5%, having actually for the first quarter being as high as close to 4% just a month ago. But obviously, we know it can be volatile. So what do you make of that?
So I think it's an important marker, but we have to understand the why. Why has the Atlanta Fed GDP nowcasting model been revised so low? One of the key drivers has been the trade data, right? We saw a very sharp surge in imports in January. Now, part of that was gold imports. Those typically get excluded from the GDP calculations, so you have to factor that out. Then you have to factor a potential reversal in terms of the trade flows, perhaps in February and March, which would temper the overall quarter growth for trade. But I think what is perhaps more important that people are missing is that what's happening underneath the surface is that there's more caution on the part of consumers. And after a very strong 2024, consumer spending is slowing. It's not retrenching. We're not seeing a massive pullback in consumer spending, but in a high cost environment where there is tremendous inflation salience, people are very attentive to higher prices. There is that increased caution when it comes to consumer spending, and that is the key driver of economic activity in the U.S. With income growth around 1.5% to 2% and consumer spending growth around 3%, there's that gap that I think indicates that there's going to be a further slowdown in consumer spending activity.
And typically we would see seasonal factors affect first quarter GDP growth in general. How much of this is because of that versus companies trying to get ahead of these tariffs?
I think it's a combination of All of the above. We have a highly uncertain environment where trade policy uncertainty has surged to levels that we have never seen, even higher than what we experienced in 2018, 2019, when we were starting to see the development of this trade conflict between the US and China. And then on top of that, you have a high price, high interest rate environment, which is curtailing consumer spending intentions and leading businesses to adopt a bit of a wait and see approach. Yeah. They're not pulling back massively, but they're in that wait and see approach. Add to that heightened volatility, heightened financial market volatility, and you have a mix that is not necessarily supportive of growth momentum.
Greg, thank you so much. Gregory Daco, EY Parthenon today for us. Futures deteriorate, -7 down to -10. Dow futures -50 as well. The VIX comes out a little bit, 23.20. Still early in the morning, 7:10 Wall Street time. I'm not going to make a big deal about it, but the market's speaking on this day of the joint session of Congress. Yields are unreal. The Paul Sweeney yield was a 4.02 yesterday. We're enjoying 3.90 on the 2-year yield. You really wonder what Fed modeling is as they stagger to the end of March meeting. The litmus paper of the global system is foreign exchange. We're thrilled that Daniel Tobin can join us, senior FX macro strategist at Citigroup this morning. You had a weaker euro call. I don't know if you were parity or not. Jane Fraser would probably throw you out the door if you said parity. But you get stopped out. Were you stopped out this morning on strong dollar?
No, actually, we had moved to a view that it was going to be very choppy. Actually, right around inauguration, we said we've probably seen the peak in dollar. We could revisit it, but it's going to be very, very choppy, and so you have to be very selective.
Give me some theater. Worldwide on Citigroup in the last 6 hours. So what are the phone calls like?
I think right now the market is buying the euro. I would take the other side of that. And in fact, that's the way we started positioning last week, suggesting that, look, you have a lot of negative price into the dollar, and we think the sequencing of events in the coming months is actually going to be more dollar positive than it is negative. Tariffs being a big driver, potential risk-off environment. Those things are coming to fruition. They're dollar positive.
Jess, I'm watching the tape. It's not going
Oh, no, it's not going my way right now.
But you're seeing the contrarian indicators there. So what sort of levels do you see where the dollar can go from here?
Yeah, look, I think if you know, euro dollar's around 105.50-ish right now as I was coming into the room, I think maybe there's a little bit more upside just on the sentiment. But I could see this reversing and us heading back down towards around 102, 103 as we start moving closer to April, when we are actually going to see European tariffs come in, right? Right now, the market is singularly focused on this stimulus, financial, military spending. That's going to take a long time. That's not going to offset the tariffs that are likely to come on in the next couple of weeks. And I think the market will revert back to that sooner than later.
What are some of the top questions you're getting from clients?
What do we do here? There's a lot of frustration for sure amongst the client base. It's been very choppy. You know, if you've been long, you get stopped out on these moves lower. If you're short, you get stopped out on these spikes. So I think more so, how can we avoid some of that volatility? And what we've been suggesting is actually using long yen more so than long dollar. Yen has actually been performing quite well. That was one of our higher conviction calls, is to have a long yen dynamic as well. And part of that is the safe haven dynamic. Part of it is JGB yields moving higher. And part of it is concern on growth because of tariffs.
That's interesting because the dollar-yen pair tracks S&P 500 futures very closely. So I know that's something on the equity side of things people are watching closely, Tom.
Is this a seismic moment? I mean, you have, you know, to your great credit, you can stand at 60,000 feet and watch the political show go by. But between what we're seeing this morning, futures deteriorate -13, and what, you know, I don't know where the VIX will be for the president tonight. Maybe we'll pop through the 24 level and get some, you know, theater, if you will. But are you riveted by the moment, or do you just look at this as noise?
It depends on what we're talking about. On the European side, the rethinking of the security framework, the need to reinvest in military after underdoing so for the past couple of years, the uncertainty of the U.S. security blanket, this is a monumental moment for Europe. Right now, there's a lot of optimism because some of the big numbers have been thrown out. It remains to be seen whether they will, in fact, use this moment to come together, rebuild their military, and actually start having bigger influence through hard power. This is a different world now, right? This is the U.S., Russia, and China have hard power. They're the ones dictating terms. Europe has lost some of its influence. Can it regain it?
Do you at Citigroup, and this is away from your remit, but do you anticipate reciprocal tariffs from Europe?
Yes.
I mean, if somebody wants to import a Ford or a Chevy into Europe, I'm making a joke, Jess. If they want to import a Ford or Chevy, they're going to put a tariff on that?
Yes. Yes, I think we're going to see. So one key thing, the Trump administration is treating VAT as a tariff effectively. That changes the dynamic for tariffs on Europe. If we were just looking at reciprocal tariffs, they're pretty even between the US and Europe. This wouldn't be a big thing. When you throw VAT into that, it really changes the dynamic. And it does mean that when the US imposes these tariffs in April, they're going to have a significant hit.
I got to ask, what's your loony call this morning? We've got a huge audience up in Good morning up in Canada. We only had Dan in to talk about loony. What can loony pop out to a 150?
I would say 147.
Really?
And in fairness, we've been pretty bad at calling the loony. I did not expect these tariffs to come on. We thought that they would be delayed on Canada and on Mexico. We did think they would come on China.
You got a lot of company. I mean, you know.
Yeah, no, I think it was a
Jane, if
surprise.
you're listening, he's not going out the door this morning.
So I think that, we could see a little bit more weakness. But, it's pretty interesting, the reaction that we're having so far. It seems a bit muted.
Dan, thank you so much. Dan Tobin there on foreign exchange. He's with Citigroup. This is what we're going to try to do this morning, folks, is sprinkle out the economics of Greg Dacko with the foreign exchange, the litmus paper of the system with Dan Tobin of Citigroup here. The tape deteriorates from -11 has become -20 on S&P futures. With our news in New York City, here's Michael Barr.
Thank you very much, Tom, Jess, Lisa. Russia has agreed to assist the Trump administration in communicating with Iran on issues including its nuclear program and support for regional anti-U.S. proxies. The U.S. and Russia have discussed the matter, with Russia's Foreign Minister Sergei Lavrov sharing details with his Iranian counterpart, and Iran's response has been non-committal. President Donald Trump has ordered a pause to all military aid to Ukraine. It puts pressure on Ukrainian President Volodymyr Zelensky days after an Oval Office blow-up left U.S. support in doubt.
Well, I just think he should be more appreciative because this country has stuck with them through thick and thin. We've given them much more than Europe, and Europe should have given more than us.
The UK and France are drawing up a temporary ceasefire proposal to present to Trump. President Trump has imposed 25% tariffs on most Canadian and Mexican imports and raised the charge on China to 20%. Canada and China have retaliated with their own tariffs today, with Canada imposing levies on $107 billion worth of U.S. goods and China imposing tariffs of up to 15% on American agricultural shipments. President Trump will be before a joint session of Congress tonight to give an accounting of his first weeks in office. Elon Musk plans to attend the address, and the president says he's going to tell it like it is. On the Senate floor Monday afternoon, Senator Chuck Schumer said he is not interested in what will be said.
Americans can expect Donald Trump to say many things that are false, including perhaps Russian information. What we will not hear from Donald Trump, however, is the truth.
Bloomberg will carry the address live starting at 8 p.m. Wall Street time. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Jess, Lisa.
I'm learning so much this morning. Michael Barr, Jess Menton, Lisa Mateo, they're not called chicken feet.
No.
We export chicken paws.
Right, that's right.
That's
Learned
what
something
they
new on
call
this
them.
Tuesday.
Paws?
What?
Like a dog?
Woof.
Wait.
WS.
Wow.
It's not chicken feet.
No, they're called by the export people. I'm trying to figure out for the congressman from Arkansas, what percentage of chicken paws out of Arkansas go to China? So far, my sophisticated answer is a lot.
Okay.
But I'm learning every day, folks. Chicken paws, not chicken feet, and they're like serious stuff. People really like. They put them in soups and that. And
Do you like that? Do you put
no,
that
I've
in your
never
soup?
enjoyed
No?
a chicken paw.
Maybe it's time.
I'm learning every day. But that's where we are, folks. And we're going to bring in all the resources of Bloomberg today. This is truly an historic day. I really want to emphasize that if the president goes through with the tariffs, and as Michael Barr said, the reciprocity that we see from other nations, I think we wake up tomorrow in a whole new world after all. There's no other way to put it. As Jess Menton said, markets react. At your desk this morning, don't give me the NVIDIA story down to 8-9%. yesterday. What are you watching within the sectors of the S&P?
Well, I actually, I was able to pull some data from Emma Wu. She heads derivative strategy at JP Morgan. So retail investors aggressively buying the dip. Well, she talks to me, Tom. So they actually surpassed the 1 billion threshold, more than doubling the 1 month average. And of course, I know you mentioned NVIDIA, so that stock alone contributed to 1 billion in inflows. Right. That was the 5th largest inflow ever for the past 5 years.
Good morning across the nation on a really historic Tuesday. The joint session tonight, Kaylee Lines and Joe Matthews just flat out ripping up the script. There's no other way to put it. What you need to know now, gold up 1%, $32, $29.32, not to 3,000, but getting there rapidly. American oil, $67.46. That 10-year real yield craters, 1.77%, and futures now negative 21. Please stay with us through the morning. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures falling as U.S. trade tariffs spark retaliation. Canada announced a sweeping package of levies in response, and China imposed tariffs as high as 15% on some U.S. exports. Now, speaking of which, shares of Illumina down 3%. This is after Beijing said it would ban the U.S. biotech from exporting gene sequences to China. So let's get to futures right now. NASDAQ futures down 0.5%. S&P futures, same there, and Dow futures down about 0.3%. We go over to the two-year yield, 3.89%, down 5 basis points. The yield on the 10-year, 4.13%, and that's down 1 basis point. Two currencies, a few to check in with. We have the Bloomberg Dollar Spot Index down about 0.5%. The Mexican peso down 0.1%. The Canadian dollar up 0.4%. We go over to the euro, up about 0.5% at 105.48 against the dollar. More economic data out today. It's a read on employment change from ADP. We have services, composite PMI from S&P Global. Also read on factory durable goods orders. Traders now actually fully pricing in 3 interest rate cuts in 2025. Now to earnings we go. Checking back in with Target right now. Its shares up about 0.5%. Shares of Best Buy, they're down more than 0.5%, even though it blew past estimates for the fourth quarter and raised its quarterly dividend by 1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Jess and Tom.
Lisa, thanks so much. What a lineup we have today. Abby Joseph Cohen to be with us later. Carl Weinberg with his international economics at Lehman years ago. But without question, this is our conversation of the day. Jean Boivin is out of Université de Montreal and Princeton University. He is definitive on his Canada and their economics. He is the head of BlackRock Investment Institute. But today is different. We speak to Jean Boivin about what is occurring between Detroit and Windsor, Ontario. Jean, you know the landscape better than anyone. If I look at reciprocity across that bridge between Windsor and Detroit, what's Doug Ford going to do? Mr. Trudeau, the future Mr. Trudeau, what are they going to do on a reciprocal basis against what Mr. Trump is doing?
Well, good morning, Tom. Good morning, Jess. It's a pleasure to be here. Yeah, I think, we've already started to see reciprocity at play today. And I think there is, from they've been saying pretty clearly, I think there'll be funding in kind, I guess, over as things go. So that's the first thing. I don't know. I mean, I think we're all learning as we go here what's going to be the extent of these things. But in terms of the intent of responding, I think there's no doubt that this is the current stance there. And so we'll see what happens in response in the U.S. after that as well.
Jean Bovin, we studied very carefully Ken Rogoff and, of course, Maurice Obstfeld out at Berkeley. Professor Obstfeld writes an absolutely blistering op-ed released about 4 hours ago in the Financial Times. It's like Berkeley 101, Jean. You can appreciate that. You're a freshman at Princeton, and it's like, oh, it's complicated. Professor Obstfeld makes clear the simplicity of the Trump administration has no academic grounding. Where is the part where President Trump is being too simplistic?
Well, I think I'll confess I didn't have a chance yet to read.
Of course.
I will. But I think it is a fact that when it comes to trade, we have like very good models to think about, like, more static, trade pattern, and we go back to Ricardo. But the reality is a lot more complex with trade, and what's going to be the ultimate macro effect on growth, for instance, I think is a bit difficult for academics to agree. I think the inflation impact is pretty clear. I think that you're going to find consensus there. But more broadly than that, I think it's harder. And I think it all depends also on what is the objective of these tariffs.
Right.
I mean, are we talking about fiscal revenue generation? Could be an objective. Are we talking about trade balances? I think one thing that is not fully appreciated is that these two objectives work against each other. If you really are trying to maximize tax revenues, you're going to have to live with a wider trade balance. So I think more than what the academic conclusion would be, I think is the lack of clear understanding of what are we doing here that I think creates certainly a huge amount of uncertainty.
And to frame this out, Jess Menton, the Atlanta GDP is a headline making negative 2.8%. And a lot of people, including Hatsius and the team over at Goldman Sachs, are saying it's actually still diminished, but somewhere in the zero, even up as high as positive 1.6. So there's a real argument about the growth dynamic.
Right, and the volatility that we see. So, Sean, I mean, you were actually previously appointed as deputy governor of the Bank of Canada. And of course, we're looking at how Canada retaliated, putting tariffs on $107 billion of U.S. products. So your view when it comes to the Bank of Canada and when it comes to the direction of interest rates, we're looking at overnight swaps increasing those bets that the Bank of Canada will cut rates by 25 basis points at its March 12th meeting. So how do you view this when it comes to central bank policy?
Yeah, so I think the starting point here is that, and this is not what the market is currently pricing, but I strongly believe that this is a stagflationary shock, right? I'm not saying we have stagflation, but I think the shock itself, these kinds of measures, are stagflationary. They're pushing growth down and they're pushing inflation up. And I think that makes it tricky because from the U.S. perspective, like the yields are falling. We had like 50 basis points of decline in 10 years over the last month. And I think that has been interpreted mostly as a growth shock. I think what's going to be the wake-up call over the next 2 weeks is that, like, inflation is going to be the other part of the other leg of that story, and that's going to complicate the rate kind of landscape. Right. So I think on the U.S. side, it's not clear that to us that there's going to be much room to cut rates. For Canada, the complication is that there's like now a weak Canadian dollar dynamic, a weak loonie, which is like a massive issue for the central bank. So, I mean, as long as this, or they all say that as long as it's orderly, there's no gapping in currencies, that's not the objective. But I think like once you get to the level we're seeing right now, it's going to be an additional concern. So even though it's a stagflationary shock, on top of that, you have a weak dollar. So I think the knee-jerk reaction will be to cut. But I think that's going to be much more messy and complicated. And I think it's a given that we have an easing cycle coming out of this in Canada.
Bloomberg surveillance this morning across the nation, across Canada as well. Thank you for listening on Apple CarPlay, Android Auto, on YouTube. Subscribe to Bloomberg Podcasts, growing each and every day. Major shout out to David Weston in his conversation on Friday with the Treasury Secretary of the United States that had over 3 million downloads on our digital platform in a matter of hours. Jess, a final question, please, to Dr. Bovin.
As far as when it comes to the economy, what do you think is the biggest risk when obviously we're continuing to talk about tariffs, but what's the follow through here?
Yeah, so I think this is an environment with, I don't think I've ever seen an environment where there's so many moving parts, over which you have as wide a range of views from the commentators on how they're going to play out. So I think this is very unusual. To me, the most important thing to watch is that, as I said, I think this is mostly a stagflationary shock, where the tariff piece, inflation was not a resolved issue from our perspective. So it's adding a layer to something that was already a problem. And then we're going to have the fiscal side of things that's going to play out over next week, right? So we're going to have the discussion, government shutdown potentially. So the waking up of this is stagflationary in nature, plus a fiscal story that I think will be expansionary. Those two things, where when you see the yields at 4.13 on the 10-year, I think that raises questions. And to me, that's the watch.
Jean, thank you so much here on Short Notice. Really, really appreciate your attendance today. He is with BlackRock. We hope to get Dr. Boivin in our studios for an extended conversation here in the coming week. Jean Boivin is with BlackRock. Jess, your thoughts about this as we migrate through the 7 o'clock hour? I mean, we're seeing a global reaction. You and I looked at futures -11. We're now enjoying futures of -31. The VIX ought to stick. I mean, we're moving.
Right, and when you're speaking about the VIX closing above 23 yesterday, that's actually 45% above its one-year average right now. And something else I'm watching pretty closely.
So you take a percent on the percent of the VIX?
Yes, exactly. Or you could watch the VVIX as well, the measuring how the volatility of the VIX. But also 3-month implied correlations is another one from SIBO that I keep watching. So it had been hovering around historic lows, but that's been starting to pick up. And the whole reason it matters is when it's hovering around lows, that means markets and stocks specifically aren't moving in sync. So you can see certain pockets of the market not moving as much as others. But when you start to see correlations creep higher, that's when you see bigger moves more broadly in the market.
Well, we're seeing bigger moves more broadly here. What in your mind is the VIX statistic where here's Secretary Besson over on Fox right now with a headline on China tariffs, quote, China export model not acceptable. I think we knew that. The Secretary of Treasury, after his Weston interview, China export model not acceptable. Okay, back to the markets, Jess Menton. To me, like 30 is obviously sweat. That's sort of a round number here. But I would say in the new regime, with a VIX at 23.80 pre-opening, we're there.
Right.
We're like at a tension point.
And then also over the past 3 months, the S&P 500's averaged realized volatility on days when CPI comes out, the government's monthly jobs report, and Fed interest rate decisions has actually been nearly 22%. So that's double the almost 12% reading over those other sessions the past 3 months.
It is an extraordinary Tuesday. Stay with us on your television at home, in your office, YouTube. It's our new platform. Subscribe. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures falling. Investors look to President Trump's address to Congress today for kind of any hints on future steps in his push to remake global trade. We have NASDAQ futures down 0.5%. Same for S&P futures. Dow futures down 0.3%, or 156 points. The 2-year yield 3.89%. That's down 5 basis points. And the yield on the 10-year 4.14%, and that's down 1 basis point. To commodities, oil extending its slump, concerns over global trade tensions. Right now, Brent crude down down nearly 2%, $70 a barrel. WTI crude $67 a barrel. We move over to gold. COMEX gold up more than 1%, $2,931 an ounce. To earnings, we mentioned Target, Best Buy, but also AutoZone. Their shares off about 0.5%, reported comparable sales for the second quarter missed estimates. Then we have a few companies making news. Sources say Sycamore Partners nearing an acquisition of Walgreens. Now, a deal that would end the drugstore company's run as a public company. Its shares right now are up about 4%. And finally, Microchip Technology letting go of about 2,000 workers. The company says it'll incur between $30 million and $40 million of related costs. That is your Bloomberg Business Flash. Jess and Tom.
Lisa Mateo, thank you so much. We are advantaged at Bloomberg with a gentleman who's done a tour of duty in government at the White House, directly at the White House, in Bloomberg Economics. And then umpteen years ago, somebody said, let's put Brendan Murray in charge of trade. And he has begun absolutely definitive for not only the usual show up and throw up verbiage on trade, but anecdote and actual what's going on the ground. Brendan Murray from a cornfield in Iowa. No, I'm kidding. He's at Queen Victoria Street in London and joins us this morning. Brendan, you got a great article about Republican farmers in Iowa going, what in God's name is going on? What did you learn in your reporting on Iowa corn and their future?
Well, yeah, Tom, there's going to be a lot of focus today and in the days ahead on the automobile industry, on electronics and energy and food, and a lot of these major products that move back and forth between Canada, Mexico, and the U.S. But if you look at in the heartland of the U.S., at American farmers, one of their key products was something that China retaliated against today, and that's soybeans. And soybeans are, kind of a pretty basic sort of commodity. You can grow them in Brazil just the same way you can grow them in Iowa. And the farmers in the Midwest, and in Iowa in particular, in large blocks voted for Trump. But at this meeting that we've seen some reporting on, they're not happy about this trade war that Trump is starting. And if you alienate China as one of their main customers, that's not good for them. And of course, soybean prices fell today. So in the grand scheme of things, autos and electronics are much more economically important, but politically, the president needs to hold that base. How loudly are Republican farm state senators going to applaud tonight when he says,
let's combine the Brendan Murray magic here. There's a guy named Grassley who's 114 years old. I adore the guy. He sounds like my grandfather out of Ames, Iowa. Iowa City, Iowa, years ago. Brendan Murray, what is Senator Grassley going to do to sit the president of the United States on? Grassley's sitting there at the desk with Kevin Hassett with a Pennsylvania PhD. What do they tell the president?
He's going to say, he himself would say, look, I'm in the minority on this position, on this free. The Republicans used to be the party of free trade, opening markets abroad, and that kind of thing. And he'd be the first to admit that he's now in the minority in that, with that view. So my guess is he would talk to the president about some sort of farm bill, some sort of assistance to give farmers the way the farmers got the help during the Trump's first term to offset this loss of income that they're looking at. It's not just the sales to China that are going to be affected. It's farmers import this thing called potash, and it's for fertilizer, and they're going to have to pay more for it now. So planting season, so it just kind of hits them on both sides. So Grassley is going to say, if you're going to go this route, then farmers need some welfare essentially.
Here's the difference.
In a farm bill.
Brendan's a city guy, and he's talking about this thing called potash.
Right.
Jess Menton has lived potash.
Right, College Station, Texas.
Get a question in here to Brendan Murray.
Well, because Brendan, you were just talking about how when it comes to the tariffs impacting more electronics and autos, but at what point do you think, and how long before we could see changes when it comes to the price of consumer goods at the grocery store?
I mean, it was just the Target CEO was on the airwaves today saying that customers could see price hikes within days, and he's talking about strawberries, avocados, bananas, vegetables, the kinds of things that the U.S. depends a lot on Mexico for. So, they flip the switch to turn the tariffs on, and companies say, I'm suddenly paying 25% more, and they just pass that on to consumers. So I don't know how you stockpile tomatoes, because they don't exactly last that long, but you got to figure that tomatoes are going to be 25% more expensive next week.
Brendan, keep writing with your team these anecdotal, real articles about real people and not people in bow ties going to 3 decimals. By the way, Brendan, if you go to Michael Barr's refrigerator, you will find aged tomatoes.
And you won't find chicken paws. You're going to find chicken feet.
Brendan Murray, thank you so much. Driving all of our trade coverage, one of the jewels of Bloomberg News. Futures were negative 35, a little better right now, negative 28, but the VIX out of stick, 23.77. The Sweeney yield, the 2-year yield, wow, 3.90%. With our news in New York City, Michael Barr.
Tom, Jess, Lisa, thank you very much. Sources tell Bloomberg Russia has agreed to assist the Trump administration in communicating with Iran on issues including the Islamic Republic's nuclear program. Trump relayed that interest directly to President Vladimir Putin in a phone call last month, and top officials from his administration apparently discussed the matter with their Russian counterparts at talks in Saudi Arabia days later. Ukrainians are grappling with the consequences of the Trump administration's decision to pause military aid vital for their fight against Russia's invasion. That step came days after last week's disastrous Oval Office row. President Trump directed the U.S. to pause all assistance to Ukraine as he seeks to pressure Ukrainian President Volodymyr Zelensky to engage in peace talks with Russia. President Trump's tariffs against Canada and Mexico have gone into effect. Starting now, imports from Canada and Mexico are now taxed at 25%, with Canadian energy products subject to 10% import duties. Canada has announced tariffs on American goods. Canada's Minister of Foreign Affairs, Melanie Joly.
Our efforts are still ongoing. We've been in contact with the Trump administration, and the Minister of Finance, Dominic LeBlanc, has been in contact with his counterpart.
China related today's additional tariffs on farm exports, on the additional tariffs on farm exports. Tonight, President Trump addresses Congress for the first time in his second term. Bloomberg's Amy Morris is in Washington with a preview.
Since his re-election, President Trump has blazed across the federal government, dismantling norms and traditions and parts of the government itself, firing thousands of federal workers, closing agencies, and positioning the U.S. closer to Russia. All issues that may overshadow his address to Congress. The White House says President Trump will also discuss his economic agenda. In Washington, Amy Morris, Bloomberg Radio.
Thank you, Amy. For full coverage of the president's address to a joint session of Congress, stay with Bloomberg for a special edition of Balance of Power with Joe Matthew and Kaylee Lyons. That starts at 8 p.m. Wall Street time on Bloomberg. Global news, 24 hours a day, and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Jess, Lisa.
Michael Barr, thanks so much. All sorts of brilliance out on the Twitter social media feed from legit talent. Kevin Gordon at Charles Schwab models out an average effective tariff rate of 11.5%. Jess, don't give me the drama of the 20s or the 30s. Yes, I remember that, Jess. It's the highest since the 1940s, using the composition, service, and goods of today. You're back to 1940s elegance here. That's not a good thing.
No, it's not. Actually, we were just talking about Target. If you're looking at that stock, actually closed up about 1% pre-market trading, but I want to point out it's lost almost a quarter of its value over the last 12 months. And when you compare that to where Walmart was trading, that was trading more like a growth stock. I mean, ahead of its earnings over a 12-month basis, it was up over 70%.
You've heard me say I just don't get it.
You don't get it?
I'm not participating in the joy. The joy this morning is we'll give you more data checks. Futures negative 29, the VIX 23.77, stasis in the last 20 minutes. Maybe waiting for things to come out of the White House. We'll have to see on that. From New York City, we're on YouTube. Subscribe to Bloomberg Podcasts. Good morning.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines on Bloomberg Surveillance with Tom Keene, Paul Sweeney, and Lisa Mateo.
Thank you so much. Good morning, everyone here. Got 8 things going on here. The currency's weaker. Jess, what are you looking at on the screen? What's the one number you're looking at?
Well, actually, we were chatting a little bit about that earlier when it came to the 3-month implied correlations from SIBO, and I'd pointed out that just means that as it moves higher, more so stocks aren't moving as in sync. They're actually moving more in sync than they would have had, and that actually, if you see that trading around its 65-day trading high, usually that means that you're going to have a little bit more turbulence overall.
In this segment, you should say, we're looking at the 3-month correlation of no eggs at Costco with our newspaper report this morning. Lisa Mateo. Oh, Lisa, are there eggs in aisle 6?
There are eggs, but paying more as usual. And speaking of paying more, this is kind of a look into what products are going to be, you're going to be paying more. The the Washington Post did this analysis. It was like international trade data from the Census Bureau. So this is a breakdown. Stick with me because there's some numbers here. So we start with China, right? The main source of imported consumer goods, sending about $210 billion worth of everyday household to the U.S. in 2023. So what does that mean? It means electronics, clothing like cotton shirts, shoes, kids' toys, things like that. Then you get to the grocery aisle. About $9.9 billion worth of vegetables, more than $11 billion worth of fruit and frozen juices come from Mexico in 2023.
Wait, what about the beer?
And then, then you have avocados, right? The beer, tequila. You can't forget the tequila, Jess. And then we talked about cars, right? We've been talking about cars, Canada and Mexico. The U.S. also imported $93 billion worth of crude oil from Canada in 2023. So it's kind of this good breakdown of what you can possibly pay more for.
It's going to be, I think it's unknown. The uncertainty here is off the chart. Some of the research notes I mentioned, George Saravelis at Deutsche Bank with a blistering note like 10 minutes ago, and we'll get more in. Futures deteriorate now, new lows, negative 37. Another story, Lisa.
Yeah,
please.
So Tom, you always tease me about looking for gluten-free products, right? So how about tariff-free products?
A what?
Tariff-free.
Oh,
yes.
tariff-free.
Yes. So these are the signs. Yes, with a T. It's happening at this Housewares trade show in Chicago, the Inspired Home Show. So a lot of the booths are posting these signs that say tariff-free because they're trying to attract new customers. One company did it. He said that they actually helped him land new customers. He started changing up some of the things he does with this company, but he says that is starting to help. So you might start seeing some of these signs, as.
What do you think, Jess? I mean, you're the Texas girl here. I mean, Texas is booming. Let's all agree on that. What does the Mexican border slowdown do now to Texas?
Well,
and the answer is it's ginormous.
Well, it is ginormous. I grew up in South Texas, so especially when it comes to a lot of the hospitality, construction jobs, as well as landscaping, that's a big question mark is what it means for some of those smaller businesses that depend on some of that labor and what it means for if it's not as cheap as far as how that feeds in to their businesses, as well as wage inflation.
So can we get one more in?
Yeah, one more. So we heard about Target, right? The CEO saying that he was going to start having to increase prices, especially fruits, vegetables, things like that. But the CEO of Chipotle actually told NBC Nightly News that they are going to foot the bill for any cost increases from tariffs. He said for now, that's what they intend to do because their economic model can withstand it. But he did add that pricing changes could eventually come if those costs become a, quote, significant headwind. And when we were talking about the avocados, they actually get 50% of their avocados from Mexico, but they also have the rest coming from Colombia, Peru, Dominican Republic too. So that might help out. But he estimated the cost of goods increasing 0.6% on a rolling basis from tariffs. But he says right now they're not going to pass that on to the consumer.
We'll give you as much as we can on this. Yeah, Brendan Murray on with us earlier was really good with all of his trade experience talking about the fields of Iowa. We'll just do as much as we can on this. It's certainly not going away, and I'm not going to mince words. We're trying to find a bid on the tape since, 1 p.m. yesterday. I got futures at negative 36, and now the VIX over 24, and we'll have to see. Lisa Mateo, thank you so much on the newspapers. Jess Menton with us. Yes, folks, somebody mentioned that's a Texas A&M bow tie. Robert McTeer, thank you so much for my Fighting Texas Aggie bow tie.
Just for me.
Menton's people called up and they said, don't play Helen Reddy. Don't play Bette Midler. Play Tanya. And there's only one Tanya.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What's the immediate take of a tariff war?
For the longest time, technology has been the driver of this market.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Trump declared a national emergency at the U.S. border with Mexico.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, and Lisa Mateo. And historic Tuesday. Tonight, the President of the United States will explain his tariff policy and a few other items as well, including what we see in Ukraine. Joe Matthew and Katie Lyons will lead our coverage of the President's comments. In the meantime, it's simple. New lows on futures here in the last 2 minutes. Negative 37 off of the collapse yesterday, and the VIX now printing out over 24. We'll give you more data checks here. Paul Sweeney downtown at Bloomberg Invest with Alex Steele, Jess Menton, kind enough to be with us. What is your team working on? Don't give us I don't want to get out front of your reporting,
yes,
but what is the question on our equity desk here?
So actually, we're discussing the debate on Wall Street about a Trump put, which is actually, amongst some people, feel like that is way too soon to even have that conversation.
He's going to come out and pull back from the
Well, he's
comments.
giving a speech today, so it's going to be what type of rhetoric here. So Bank of America, Michael Hartnett was arguing last week that 57.83 would be the first strike target, and that would actually be the reason is that's where the S&P 500 closed on November 5th. So
Come
the day
on,
of the
and it's
election.
near the 200 moving day average. And
Right, but also that's not even that far from all-time highs. That would only be around 6% off of the all-time highs. So really, theoretically, a lot of people, especially portfolio managers I'm talking to, don't really buy that right now.
Okay, the Trump put, that's what we're calling it?
Apparently.
Okay, I'm learning every day. In this hour, Barbara Reinhard will join us, and Abby Joseph Cohen coming up here later. Carl Weinberg with all of his experience on international economics in the 9 o'clock hour. Again, futures at negative 37. From the Interactive Broker Studios, our Bloomberg Business Flash, Lisa Mateo.
And we got futures pointing to a lower open. President Trump ramps up his tariff war with the nation's three biggest trading partners. We'll start with NASDAQ futures down 0.7%, S&P futures down 0.6%, Dow futures down 0.3%. The two-year yield 3.91%. That's down 4 basis points, and the yield on the 10-year 4.14%, and that's down 1 basis point. Stocks in Europe retreating, concerns it could be the next to face U.S. tariffs. Then we go to Asia. Chinese stocks mostly lower after the country announced retaliatory tariffs. As far as currencies, we have the Bloomberg Dollar Spot Index down about 0.4% because of the news flow. Want to point out the Mexican peso down 0.4%, Canadian dollar up 0.4%. We go to the euro. The euro up 0.6%, actually rose to its highest level since February 26th. The reason, the EU looking to boost defense spending. It's at 105.53 against the dollar. A bit of a mixed bag when it comes to automakers and tariffs. You have Stellantis down 3%, General Motors down nearly 1%, Ford down about 0.1%, Tesla down nearly 1%. And after falling nearly 9% yesterday, Nvidia shares continue to fall. They're down about 3%. And tariffs affecting Target, the company saying it's among the reasons why it warned of pressures on profit in the coming months. Its shares are down nearly 1%. That is your Bloomberg Business Flash. Jess and Tom.
Lisa Mateo, thanks so much. Just Menton and Tom Keene to keep you abreast of these markets. Again, still a deterioration. Futures negative 40. NASDAQ down 0.8%. Abby Joseph Cohen of Columbia Business School and all of her acclaim with this in a bit. But right now, with substantial acclaim, Barbara Reinhard, CIO at Voya Investment Management. Barbara, you wrote your usual 10,000 words. I'm kidding. It's all brevity here. Let me quote, folks, the single sentence from young Reinhard. I'd be buying equities. Mm-hmm. Is it buy the dip, or is it more sophisticated than that?
Well, I think there's two things, Tom, that are really important for everyone to know. Number one, positioning is much less, is more on sides at this point. So coming into the year, you had big positioning. Everybody was running equity overweights. Big year last year. A lot of that positioning has been taken out of the market right now. So that's number one. Yeah. Number two, sentiment, short-term sentiment indicators are very oversold. Those are contrarian indicators. S&P versus ag is down over 6% at this point, and you're seeing some fear into the market, which is generally when it's a better time to start adding to equities.
That's interesting, too, because Tom and I were talking earlier about how Emma Wu at JP Morgan, actually NVIDIA was contributing to the buy the dip inflows when it came to retail investors, but they did see them actually selling names when it came to Tesla and Apple. So we were talking about sentiment at extremes. I mean, the bull-bear spread last week for AAII was the lowest it's been since 2022, and hovering around those lows since 2009. So are your clients going in and asking to buy?
Yeah, I think it's short-term sentiment indicators are definitely oversold. The medium-term ones are hanging a little bit more towards neutral. But unless you're going to have a recession, your short-term indicators generally give you a very good risk-reward opportunity about legging into the market. It could be that you go lower over the course of March and then some seasonality really starts to pick up into April. But we think that it's difficult to time it. And when you've got weakness, it's good to buy in unless you think there's going to be recession.
I love the phrase legging into the market. I have no idea what that means.
That means buying across the dips.
Are so many dips. Being brave here. Futures negative. My eyes are failing me here. -40 on the S&P futures right now. So we have to readjust. We have to recalibrate. And it's not a day for simplistic equity questions. Are you factor choosing this morning? Are you like securities analysis, Graham Dodd and Cottle choosing? What's the method to make the marginal acquisition?
I think it's difficult to step in front of momentum at this point, right? Momentum's had a massive run. After you've had big runs like this, it's difficult to see that it would be able to do a three-peat of it and have it 3 years in a row. I'd be more inclined to buy things that are more value-oriented. Not internationally. I think that Europe is way over its skis at this point. For Europe to continue to outperform, you would need to see earnings beat outpacing the U.S. like they did in 2017. That won't be the case, or at least we don't think it will. So I'd be buying things that were much more value-oriented. If you really want to go bottom picking, look in the small cap universe. It's down over 12% at this point. So it's really gotten quite hammered, even though the fundamentals don't look to be quite that bad.
It's such a tough space because that's the ongoing debate for years when you think about whether it's the Russell 2000 or the S&P 600, and especially the 2000, just given the amount of zombie companies close to all-time highs in it. So, I mean, at what point is that really going to be more of a longer-term buy than something that you just step in and buy on the shorter term?
Yeah, the longer term, the key to buying small caps, and it's usually generally in the S&P 600, if you're coming out of a recession. So if you're halfway through a recession, ISMs have bottomed. You're starting to see the uptick from something akin to 40 to 45 on the ISMs. That's generally when you want to buy the junky stuff. That was the 2020 small cap rally. It was really led by the junky stuff.
I haven't even brought this up yet today because I'm as you know, folks, I'm death in the dots. I'm death in the parlor game of the Fed. But, Jason Furman's on fire this morning out on Twitter, and there has to be a Fed reaction, except the question, Barbara Reinhard, are their hands tied?
It's going to feel stagflationary for a little while. You're going through the markets right now. They're going through a proper growth scare. Tariffs are only going to exacerbate that to the downside. And when there's a lot of uncertainty, what do corporate CEOs and treasurers do? They start to pause. They put out decisions. They say we're going to decide on hiring later this year. So that could get U.S. GDP growth down to sub 2%. But you would need a significant shock to get it below 1%, which would really kind of start skating along the lines of recession. The Fed's hands may be tied for maybe a meeting or two, but they will react if they start to see weakness in the labor market.
Will they react if they start to see weakness in the stock market? Alan Greenspan used to say, the stock market is an important barometer.
It is an important barometer. I think they have a little ways to go because of the very big back-to-back gains that you had over 22 and 24, or 23 and 24.
Is there a specific level on the S&P 500 or percent drawdown that you would need to see?
Gosh, we don't necessarily do things kind of on implied levels. I mean, 200-day moving average is what everyone looks at, but that could be a big moving target.
Right.
I think it's more a culmination of a lot of our indicators. So we have, sentiment indicators, valuation indicators, and also fundamental. The fundamental deterioration that you've seen in the market is really due to this uncertainty. It will get worse if these tariffs they are going to be imposed if they continue for a prolonged period of time.
Talk to us about the difference between the markets set up when Trump first took office in 2017 versus now, because even if you're looking at asset manager positioning, exposure to those equity futures, I mean, that's tracking above the 40th percentile coming into this year. Back in 2017, it was below the 10th percentile.
Right, Jess, that's such a good question. I'm so glad you brought it up. In 2017, it was a very different setup. So the U.S. was kind of still plodding along. having a great deal of difficulty after China devalued its currency in late 2015 and into 16. There was a big drawdown, almost 20% decline in equities, and it was struggling to kind of shake off some of that malaise. Europe actually was growing faster than the U.S. So that setup is not what you have right now, right? Equity markets have been on fire over the past 5 years, even after looking at the 2022 drawdown. And valuations are much higher. But I would also say the companies in the S&P 500 that are generating these big free cash flow, they are not terribly cyclically sensitive to the economy. However, I would say that most investors, retail and institutional investors, were very much longer equities than they were in 2017. But this is a good proper shakeout, and I think a growth scare, which we didn't have in 17.
When we're seeing the rotation more globally into European and equities in China and specifically, how long do you think that'll hold for? Because a lot of portfolio managers just maxed out their allocation toward U.S. stocks. So is this something you think is going to be more temporary or something that would hold?
I think it is temporary, as sure as night follows day. Europe will tend to have these kind of, and IFA in general, so developed international, they tend to go through these fits and starts where they have, 20% counter trend rallies. They can go on anywhere from 1 to 6 months. They draw a lot of investors in. You start hearing the cry to Europe is going to outpace the U.S. I wouldn't buy that. The valuation gap between Europe and the U.S. is actually closed at this point. Europe is no longer cheap because everyone's piled into it. So my sense is that Europe would not be a place where I'd be allocating capital at this point. I'd be still sticking to the U.S.
We say good morning to all of you across the nation here with futures negative 39, Dow futures negative 166. The VIX deteriorates 24.21, up 1.43 points this morning. Barbara Reinhard with us with Voya. Abby Joseph Cohen will be with us next year on confidence to be in the equity markets. Part of confidence is a 5% money market fund. I believe it's price up, yields down across the bond landscape. What does cash do when they don't enjoy 5%?
Well, I think bond yield starting to drop is actually going to be somewhat stimulative. It kind of buttresses a little bit of the tariff, probably uncertainty in the markets. It won't be able to overcome all of it. 5% is really competitive when you've got a 10-year treasury at close to 4.15, 4.18, 4.20. So cash looks like a really good thing. But I would say cash is a paradox. It's difficult to get out of it because you become so enamored with it.
Hugely.
And that is the worst thing you can do for your portfolio over the long run.
Is it difficult to get out of Mag 7 when you're so enamored with it?
That's a good question. I think the enamoring of the Mag 7 is probably the shine is off that penny at this point. But do I think that the U.S. has better earnings power, better shareholder practices, better underlying fundamentals than the rest of the world? Absolutely.
But the issue here, come on, we're talking soybeans and logs. Maybe we're talking, cars and Michael Barr's all in a lather about the Windsor-Detroit Bridge. That's got nothing to do with NVIDIA, right?
It doesn't. But I do think that the overall landscape of tariffs will cause enough corporate CEOs to pause and to say, maybe we don't need to do that property, plant, and equipment build out. Maybe we should postpone hiring for the near term just because the visibility is low. When you don't have much visibility and you're driving a car, what do? You slow down. And that's exactly what we're concerned about.
Tom Keene bringing up those Mag 7 names. I wanted to point out, since there was so much talk last week about the Mag 7, the index in the terminal entering a correction, but most of those losses were driven more so by Tesla. I mean, that's down by more than a third in that span. And then Meta's actually higher since then, if you go back to mid-December. So how much more pain do you think in more individual stocks? Because also there's a lot of technicals for certain ones, whether you're looking at NVIDIA, where people are going to step in and buy the lows. Because even if you look at NVIDIA the last 12 months, I mean, it's still been kind of in a narrow trading range, even though you see these bounces to all-time highs and then drawdowns again.
I think the big issue is you've got a lot of concentration in the U.S. equity market. When there's concentration, it's difficult to kind of differentiate. But there are many astute portfolio managers I know that have a very good view on other parts of the Mag 7 rather than Tesla. So it's difficult to make the case that Tesla can have a really big bounce at this point, simply because I think all autos are going to kind of get washed out together with this potential tariff issue with Canada and Mexico. So I think that they're not moving in unison, and that creates more opportunity for active management.
Jess Menton mentioned the Trump put. I have no idea what that is, the Trump call or the Trump put. But let's all agree, including Trump supporters and detractors, that this president can change the script at any moment.
Mm-hmm.
If he comes out all Gilda Radner at the speech tonight and goes, never mind, what happens, Barbara?
I think that's a credibility issue. My sense is that he's relatively serious on this one.
Yeah.
But there's going to be economic pain. I mean, you're talking about throwing Canada and Mexico, your north and southern neighbors, into a severe recession. That will be felt in the U.S. And there's certain things on his tariff list that there are no substitution effects for.
Right.
So that's going to cause some issues. And I think the issues are, it's difficult to get the U.S. into a recession at this point. The economic strength is coming off of oil. I'd be more focused on a Fed put than I would on a Trump put at this point.
I agree with that strongly. Barbara Reinhard, this has been brilliant and a great effort into Abby Joseph Cohen. Barbara Reinhard is with Voya. Again, George Saravelis at Deutsche Bank minces no words. He says Canada and Mexico will enter recession. Futures negative 39. The VIX falls apart 24.24. He never falls apart. With our news in New York City, Michael Barr.
Thank you very much, Tom, Jess, Lisa. Russia agreed to assist President Donald Trump's administration in communicating with Iran on issues including the Islamic Republic's nuclear program and its support for regional anti-U.S. proxies. According to people familiar with the situation, Trump relayed that interest directly to President Vladimir Putin in a phone call in February. Top officials from his administration are said to have discussed the matter with their Russian counterparts at talks in Saudi Arabia days later. We get more with Gordar Motveli, who heads Iran's coverage for Bloomberg News.
The agreement apparently won't just cover Iran's nuclear program, which is what the Obama administration had already broken in 2015. But as we know, Trump exited in 2018 and effectively jettisoned. But he wants a deal that also, in some way, covers Iran's support for its allied groups such as Hamas and Hezbollah in the Middle East.
Bloomberg's Goldar Montevalley. President Trump has ordered a pause to all U.S. military aid to Ukraine, pending a demonstration of good faith commitment to peace from Ukraine's leaders. It comes days after an Oval Office blow-up with Ukrainian President Zelensky.
He said he thinks the war's going to go on for a long time. And he better not be right about that. That's all I'm saying.
President Trump overnight imposed a 25% tariff on imports from Canada and Mexico. He also doubled tariffs targeting Chinese imports to 20%. Canada responding with a 25% tariff of its own on American goods. President Trump will speak before a joint session of Congress tonight. Bloomberg will carry the address live starting at 8 p.m. Wall Street time. Finally, the Justice Department dropped its complaint against Elon Musk's SpaceX over alleged anti-immigrant hiring practices. Also, SpaceX postponed the 8th test flight of its Starship rocket on Monday due to issues with the spacecraft. Global news 24 hours a day, and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Jess, Lisa.
Michael Barr, thanks so much. Just been with me right now on Tesla, TSLA. I never talk about it, and people could figure that. Al Root over at Barron's with a blistering note on the Tesla strike by buyers. What does Bloomberg News have this morning? Tesla China's shipments have in February. And I'm sorry, it's round trip. It's almost back to where it was pre-election.
That's right. So
The blue
actually,
button.
the blue button
The
to turn the
Detroit
mic on.
Lions blue button.
That's right, Tom Keene. So looking at how I was mentioning down, losing more than a third of its value since mid-December. So that's actually the worst performer of the Mag 7 cohort. But actually also yesterday, even though I was bringing up dip buying on the retail side, Tesla was not one of those names. That was actually one of the names that they sold according to JP Morgan's data.
What do you have a price point in your head, or does our equity desk? I mean, it's 280 something, and now it's 273, and you know it's almost back to where it was the first week in November. Okay, great. Is there a tip point for Mr. Musk?
Well, yeah, so I feel like in this situation, that's where you want to look at what the technicals are saying and how much more further pain it can hover around, especially when you're looking at that. So obviously, even heading into this past week, I mean, it was also near its 200-day moving average. But this is also one of those stocks that, you can see a lot of moves here. And then something else we watch pretty closely is when it comes to the put skew. It actually had been the widest since early August after those shares were retreating there. So it's also a little bit of an option story there too. And now you're looking at the retail side, not buying the dip yesterday, even though we saw the S&P 500's biggest drawdown so far this year.
Adam Jonas, Morgan Stanley, Tesla, a top pick. There's all sorts of different opinions out there, to say the least.
That's right. Mark Newton, who does technical strategy over at FundStrat, he's done this a long time, used to work on the floor of the New York Stock Exchange, so he was expecting the shares to bounce around the 275 levels. So this was at the end of February, so a break below that number, he was betting that the stock would test further support around 260. So that's a level that it had last seen since before the election.
Let's do a data check here. We do that across equities, bonds, currencies, commodities. Gold up $35, $29.36. Nice pop there as oil descends, $67.50 on oil. In the yield space, a 10-year real yield was 2.00. How about 1.78? Lower yield. The Sweeney yield, the 2-year yield, is the 3.91%. Who knows what the 30-year mortgage is? Futures, negative 44.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures falling. This is as U.S. trade tariffs spark retaliation. Canada announcing sweeping package of levies in response, and China imposed tariffs as high as 15% on some U.S. exports. Now, speaking of which, shares of Illumina, they're down 4%. This is after Beijing said it would ban the U.S. biotech from exporting those gene sequences to China. Now, in the middle of all the concerns about the impact of tariffs, traders added to bets on interest rate cuts from the Federal Reserve, seeing 3 cuts in 2025. We get to NASDAQ futures down 0.8%, S&P futures down 0.7%, Dow futures down 0.2%. The 2-year yield 3.91%, down 3 basis points, and the yield on the 10-year 4.14%. That's down 1 basis point. With the Bloomberg Dollar Spot Index down about 0.3%. To earnings, now we mentioned Target. We also have Best Buy. Their shares off about 1%. Its guidance points to inflation weighing on growth. The retailer is actually coming off 3 straight years of revenue declines. We get to AutoZone. Their shares off about 0.5%. Reported comparable sales for the second quarter that missed estimates. For on-demand news 24 hours a day, subscribe to Bloomberg News now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Jess and Tom.
Lisa Mateo, thanks so much. Our economic indicators, all of our economic efforts, are brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor to staff ratio. Small firm attentiveness, big advisor impact. Go to commonwealth.com to learn about their consultative support and technology. It is so good that we have people in inorganic chemistry listening to the program. The inorganic chemist, Terrence Haynes of Washington, emails in and says it's not potash, it's potash.
Oh, okay.
Okay?
There we go.
I'm going to blame this on your Texas heritage.
What?
And I thought the same thing.
My fault.
It's my fault. It was a group effort as well. Mr. Haynes, thank you so much. I swear I'll stop drinking the methyl ethyl ketone here as we move forward. We look forward to getting Terry Haynes on here, given this political turmoil, as we can. We have economic indicators today, but they're quiet, so we're going to go nonstop here. And we're going to go nonstop with a person you want to listen to. Abby Joseph Cohen has an earned career through the thick and thin of the American landscape like no one else. At Columbia Business School now, off of Goldman Sachs. We're thrilled that the professor of business could join us this morning. Abby, we've been here, but we haven't. Kevin Gordon over at Schwab says these are proposed tariffs and reciprocity that go back at least to the 1940s. What does the future look like if we affect these tariffs?
Good morning, Tom. Good morning, Jessica. Gee, that's a simple question, Tom.
That's what we're doing today.
Yeah, you know what? I would disagree a little bit. It's not going back to the 1930s. It's going back to the 19th century. Tariff-based economy is something that didn't work then, didn't work in the 1930s, and I think it's very dangerous. You know, you have had other guests on who have talked about quantifying the impact, which will be very substantial if, in fact, these tariffs hold. And it's not just the U.S. tariffs on our best neighbors and best trading partners, but also what they decide to do. I'll use the word to reciprocate, but this is a very difficult situation, obviously. The thing that is somewhat odd about this and different from what was seen in previous periods of history is these are tariffs being levied on our friends, and the blowback, the damage economically can actually be extremely severe on our own economy, even without the so-called pushback and reciprocal nature.
To the 19th century, and folks, you've heard me talk about this, of a new Gilded Age. Maurice Obstfeld, who Abby Joseph Cohen and I worship, iconic with Rogoff and Obstfeld and Krugman in international economics, writes in the FT this morning and says it's simple. There is an inequality in America. The Gini coefficient, which is fancy math, is completely out of whack. Abby Joseph Cohen, how does Senator Grassley of Iowa or Markey of the Commonwealth of Massachusetts, how do they get us away from the Gilded Age so that we don't affect these harmful tariffs?
You have combined two very important topics, Tom. One is the inequality, which clearly is there and has worsened in recent years. We typically look at inequality based upon income, but also on wealth. And we have seen that the inequality related to wealth has actually become even more pronounced than that related to income. But what you also need to think about is how do we adjust our economy to reflect this and the power that is being wielded by those in the corporate arena, but also being assisted by the government. And you're right to say, what can the Congress do about this? And one of the things that is troubling, of course, at this point, and I'm an economic analyst, I'm a markets analyst, I'm not a political analyst, is that we don't really see the Congress getting involved in a lot of the discussions about what is happening right now. As I see it, bottom line is many of these changes, especially on tariffs, are extraordinarily painful and will be more hurtful for people at the lower end of the income and wealth spectrum.
Abby, of course, there has been ongoing debate that Trump wants to raise revenues to finance tax cuts potentially. How do you view that, and what are the repercussions with tariffs being so severe, as you mentioned, on our trading partners?
Yeah, again, I have not done the calculations myself, but looking at those people and firms that have done the calculations, there's a mismatch. The sort of revenue that would be raised from these tariffs may in fact not be all that significant, and certainly would pale in comparison with some of the tax cuts that are being discussed. So there seems to be a mismatch. The other thing to keep in mind is that when you analyze tariffs, it's a dynamic process. It's not just look at a certain percentage, in this case 25% against Mexico and Canada, and then use that number against what the imports have been, you also need to think about what will happen to those imports, what will happen to aggregate demand. And I would say that most economists would agree at this point that the sort of tariffs that are being discussed will negatively impact aggregate growth in the United States. And again, that pain will be felt most significantly by middle income and lower middle income workers in the United States.
Abby, Joseph Cohen with us for an extended moment here this morning. Right now, we're going to attempt to go here to Moscow, and business goes on. This is Mr. Putin meeting with the leadership of Myanmar. This is, of course, the former Burma, and has its own political sway. But as many people have said, certainly on Ukraine, and with the new rapprochement that we see between Mr. Trump and Mr. Putin, it lines us up, I'm not saying directly with the nation of Myanmar, that would be inappropriate, but certainly there's the allusion to new members in support of what Mr. Trump is doing on Ukraine. This, I believe, is live right now. It may not be, but I'm going to go to it anyways. Mr. Putin going further, I would say, with his diplomacy. Abby, Joseph Cohen with us, and we'll continue here with her. Abby, I was at a wonderful store, Dangerous Provisions on Madison Avenue, where they've raised the price of their egg sandwich. And next to me was a student with the blue Patagonia Columbia Business School. How are you teaching tariff economics and the market impact to the students of Columbia Business School?
Once again, Tom, a very important question. And I think that we need to keep in mind that many of the students at Columbia, and they are wonderful students, about half of the people in my class were from outside the United States. And I have to say that the discussion about tariffs puzzles them just the way it puzzles many of us here in the United States. Many of them, for example, hail from countries that are quite friendly to the United States, nations that are military allies of the United States. And to use tariffs against your friends seems a little bit odd. Now, let's keep in mind that there can be an appropriate use of tariff. For example, in cases where there's dumping, where a nation is dramatically overproducing and perhaps is selling that item in the United States or another country for below the cost of production, that might be a good reason to impose a tariff. Similarly, if you're looking to protect a particular industry for national security reasons, that might be yet another reason to impose a tariff. But these widespread, across the board tariffs on all items coming in from a particular country, especially a country that's friendly to us, there doesn't really seem to be economic rationale behind it. And I think the students are looking at this saying, what's
We're going to come back. Abby, Joseph Cohen.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We have futures really getting beat up this morning. This is as 25% tariffs on Mexico, Canada take effect, as well as an additional 10% levy on China. Now, U.S. Treasury Secretary Scott Bessent telling Fox News he has confidence in President Trump's tariff plans and that the market sell-off is temporary. Let's get to the numbers right now. We start with NASDAQ futures down 0.6%. Same for S&P futures. Dow futures down 0.2%. The two-year yield 3.89%, down 4 basis points. And the yield on the 10-year 4.14%, down 1 basis point. To commodities, oil extending its slump right now. Brent crude down about 1.5% at $70 a barrel. You have WTI crude $67 a barrel. COMEX gold up more than 1%, $2,936 an ounce. A few companies making news this morning. Starbucks names Nordstrom's Kathy Smith as its new CFO. This read the headline just coming across the Bloomberg. And another close call for Citi. Sources saying one of its wealth customers almost got a $6 billion payday, and this is after a staffer accidentally copied and pasted their account number rather than the dollar figure when making a transfer. And finally, starting today, a treat for some first-class passengers on Delta Airlines. They're going to be served Shake Shack burgers on longer flights leaving from LaGuardia Airport. There you go. That is your Bloomberg Business Flash. Jess and Tom.
Did you say Delta there?
Delta. If you leave from LaGuardia on the long flight, you get Shake Shack burgers. First class.
Long flight to what?
Long
like
flight.
White Plains? Or?
Didn't quite say.
We'll have to see. Thank you, Lisa Mateo. There's so much going on this morning. We just had images of Mr. Putin, I believe, in Moscow with the leadership of Myanmar. Lots of symbolism there, particularly around Ukraine. The joint session tonight with the president speaking to the nation and to the legislative and judicial branch as well. I believe the Supreme Court will show up for that event. Jess Menton in for Paul Sweeney. Paul Sweeney at Bloomberg Invest with Alex Steele. Look for that at 10 o'clock. Jess Menton and Tom Keene with us. Abby Joseph Cohen of Columbia Business School. Abby, you're too young to remember this, but I had the clearest memory of October of 1987, and over a series of days, we enjoyed down 31%. We're down 6%, and we're pretty much hysterical. Have we forgotten what a correction is in the stock market?
Tom, yes, I do remember that day. And one of the big differences between October of that year is that that big decline had to do with internal mechanics within the stock market. I think that one of the reasons people are so concerned right now is not just the dollar amount or the percentage amount or the rise in the VIX, it's the economic uncertainty. Back in 1987, there was no economic change that had triggered that particular decline, and so it was quickly reversed. I think what people are concerned about now is that there is true uncertainty with regard to economic policy, and there doesn't really seem to be a clear rationale, economic rationale, behind the numbers that have been thrown out vis-a-vis a 25% increase in tariff. In addition, we're facing uncertainty with regard to whether the continuing resolution that has kept the federal government working, it will expire March 14th. We do not yet have a new budget in place. So that's another area of uncertainty. One of the things, however, that I'm looking at very closely are not some of these things right on the news flow, but rather the long-term issues. And something that I don't think is getting enough attention is that decisions made by the Trump administration are damaging the long-term status of the United States as a scientific and technological leader. We're basically cutting off at the knees a lot of the work that's being done by leading scientists in the U.S. government and also in U.S. universities.
I look, Abby, where we are. I got to be quick here because Jess Menton wants to get in. We're going to have headlines out of Mexico here. President Sheinbaum is speaking right now and announcing, quote, countermeasures on a Sunday. How do you be comfortable long-term investment, Abby, owning securities here? I don't want you to, redo what David Costin's working with this morning at your Goldman Sachs, always your Goldman Sachs. But just in general, how do we have comfort with equities as a long-term opportunity?
Right now, I think we need to kind of sit back and see which way policy is moving. And then, of course, we can apply the models. As you well know, the long-term benefit of investing in the United States has been related to the strength of our economy, including the long-term investment that is made by companies in CapEx, also the investment that's made in information, whether that's education at the K through 12 level or at the university level, but also, as I mentioned before, our willingness as a nation to invest in the future by funding places like NIH and the National Science Foundation and NOAA and CDC. And I think that many investors ought to be paying attention to whether the Trump administration will reduce those cutbacks, and in fact, I hope reverse them, because they make no economic sense.
What else potentially could be coming from the White House when it comes to trade policy? Because you were mentioning that March 14th deadline for the government to avert a shutdown, but then on March 12th, just next week as well, 25% tariffs on all steel and aluminum imports are also set to come.
Yeah. Now, one thing that I don't know, again, I'm an economic analyst, a markets analyst, not a political analyst, is I don't know what the game theory is behind this. There are some people who are postulating that the 25% numbers that were picked out for tariffs were designed basically to be an opening bid, if you will, for negotiations with various countries. So where we end up, I don't know, but I think to kind of throw the gauntlet down in front of nations that have been cooperative with us over the years, that have their own economies intertwined with ours. You know, this is not a mercantilist economy. We are highly dependent upon these interrelationships that we have, and many of these tariffs will damage us very significantly.
Abby, the time we got left, I got to interrupt you. I mean, you're working a hard 15-hour week up at Columbia Business School. Let's be honest, Abby Joseph Cohen, you could slide right over to be vice chairman of the Fed, or dare I say, chairman of the Fed in a heartbeat, given the moment, the politics of the nation. How should Jerome Powell respond to this moment?
I think Mr. Powell and the other members of the FOMC need to be doing what they have been doing, and that is to focus on the data and to keep in mind the dual mandate of inflation, but also employment. And one of the things that has been terrific throughout the Biden administration has been this ongoing creation of jobs, and then the increase in the average wage adjusted for inflation for the American family. They will be watching at the Fed whether that good news continues. If we see an erosion in the labor markets, if we see an erosion in wages adjusted for inflation, I think at that point they're going to need to adjust the policy and provide some stimulus to basically offset some of these policy decisions coming out of the White House.
Interesting. And of course, folks, that's the first we've heard this morning, and always what you hear from Abby Joseph Cohen about wages, both wages and real wages, given rising inflation, is being part of the Fed calculus. She is at Columbia Business School, of course, forever with Goldman Sachs. Abby Joseph Cohen, thank you so much. Extended comments this morning. Jess, what'd you learn there? What'd you take away?
Well, I think the biggest thing, too, is when people are trying to figure out sort of the thought process of, and also the realization is, first, when markets were reacting, or lack thereof, earlier this year, you'd see some moves, but then pare those back, any of those declines, and people stepping in because they thought of this as more of a negotiating tactic. But now that you're coming more to the realization, you're starting to see more pockets of the market clearly moving on all of this.
I mean, the key phrase for me, folks, is she was getting all Mohamed El-Arian there. People go, well, who is Mohamed El-Arian? And the answer is he's definitive on game theory. And Abby Joseph Cohen mentions game theory. The game theory is on my screen right now. Is Sheinbaum of Mexico says there's no justification for U.S. tariffs, and then lectures that America should act against drug importers in its own land. The leadership of Mexico, Michael Barr will have much more on this in a moment, but Claudia Sheinbaum speaking right now in Mexico. You got to believe we're going to hear from Mr. Trudeau today, and for that matter, the candidates of a presumed Canadian election coming up. Maybe we'll hear from Doug Ford of Ontario, certainly very important as well. Futures are negative 40, they're now negative 35. The VIX 24.11. The tape fractionally better than it was 20 minutes ago. Jess says I got to mention Bitcoin if she's going to walk out the studio. 83,000. Bitcoin down 2,000, I believe it is right now. The 2-year yield, the Sweeney yield, 3.89%. We're on YouTube. Subscribe to Bloomberg Podcast. We thank you for that. This is Bloomberg Surveillance.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Jess Menton in for Paul Sweeney. Paul Sweeney joins you at 10 o'clock at our Bloomberg Invest conference with Alex Steele. I'm going to be very quick here. Futures negative 34. The VIX again under 24, 23.97. The tape churning here all in all, and I have no idea what it means to the ETF business. We're going to try to have a normal conversation now, unlike what we've had all morning. Emily Grafeo joins us. She's name, image, and likeness reporter for Bloomberg Surveillance. What's the name, image, and likeness right now of private credit? It's like the hottest thing on the street, right?
Well, we thought it would be the hottest thing.
What happened?
On the street. The SEC is not very happy that State Street and Apollo went ahead and launched their private credit ETF. Now, it's only been trading for 3 days. The flows have been pretty minimal. That can mean a number of things. Maybe advisors are waiting to see, but we know that there was this regulatory overhang. The fund launched, the SEC said, we don't like this, and now the fund has gotten like $5 million in inflows.
Is this SEC different than Gary Gensler's SEC?
This is a different SEC, but it's one where you would think they would have been more welcoming to an innovative ETF, a novel ETF that's kind of pushing the limits of illiquid investments in ETFs.
So what do you think the biggest takeaway is?
Well, okay, right now, again, the ETF has only been trading for 3 days. I would say right now, the biggest takeaway is that the private credit ETF launch has been anticlimactic because, again, there was a lot of hype. All the executives at State Street and Apollo have been hyping this up. A number of different ETF firms have been trying to put private assets into ETFs, and State Street was seen as a win because it was the first. And then we look at how it's trading, and it really hasn't gotten any money. However, that could change. It's only been 3 days. But compared to like the Bitcoin ETFs, those got millions and millions in inflows in the first few days.
Yeah.
See the difference here? I have a Texas A&M bow tie on.
My university.
Do I have a Cavalier bow tie? I don't think I do. You know, they wear bow ties down there. Darden, they do.
They do. I feel honored though that you'd rock that tie.
Darden, they do.
Guys and ties, girls and pearls. That was the saying.
Oh, very good. I like that. Emily, what do we see? Like? Okay, this is terrible. It's gonna be over. But does the ETF juggernaut just still go on?
Yes.
Because of fees. I mean, it's just, they've got the public.
Yes. And I think the ETF industry is still going to be trying to put the next hot investment product into ETFs because you said it, Tom, you can collect fees, and the more novel the investment that you put in the ETF, the higher fee that you can charge. So the ETF, the State Street Apollo ETF, which, by the way, they're changing the name. They're taking Apollo out of the name, but they haven't done it yet. 70 basis points. Compared to like an S&P index fund, which is basically 0, you can get 3. 70 is a big
Okay.
difference.
For the two of you, since Valentine's Day, you remember that. The triple leveraged negative, gloomy NVIDIA portfolios up 67%. It's the new roulette wheel. Why go to Atlantic City, right?
Yeah, it's definitely these ETFs are tapping into that gambling appetite that
Is
we've
that what
seen.
we want? Is that what the SEC is? It's like betting on the Chiefs.
This is, it's a free country, Tom.
Oh,
if
here we
these
go.
tools are here, you should be able to trade these instruments.
You got anything to say here? You're speechless.
I mean, I feel like you always get excited
Are
about
you,
the
wait, I just
levered
figured it out.
ETFs.
You guys aren't on speaking terms. Okay, fine. Jess,
we are.
please, weigh
Well,
in here.
no, I remember when Katie Graffeld was here the last time I was co-hosting with you, and you started asking her about, when it came to the levered ETFs. It seems like that's one of those things you want to learn more about, Tom.
My problem is they're in retirement plans. They could be in retirement plans, right?
I mean, I guess technically, your advisor is probably not going to put you in one.
Emily, I'm sorry. We got to play Texas music because Jess is here. Miranda Lambert, Emily's favorite.
One named Joe in a big piece of land down in Mexico. I'm hell on heels, baby, I'm coming for you. Got a pink guitar, Lincoln Town car from what's his name? I met in a bar, got a high-rise flat in Hollywood from a married man, wasn't up to no good. I'm hell on heels, baby, I'm coming for you.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
The president wants lower interest rates from Chairman Powell.
You can make the argument that this is a really rich market.
With Lisa Mateo on markets.
Stocks are coming off another record high.
And Michael Barr with news.
President Trump signing a wide range of executive orders.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. Mr. Sweeney on assignment. Mr. Sweeney at Bloomberg Invest downtown with Shanali Bassick and a host of others with Alex Steele as well. Look for them here in 59 minutes. It is an historic day on Wall Street before an historic speech. A speech, I will say, of uncertainty tonight from the President of the United States. It will be a joint session of Congress, and it's anticipated, and certainly the news flowed just in the last 12 hours. Moments ago, the leadership of Mexico speaks. They look to Sunday to adapt. We haven't really heard directly from Canada yet. We'll see if we can find the Ontario leader, Doug Ford, here within the hour. The VIX up a stick, 24.15. Deterioration in the market, but stasis here at negative 39 on futures. Jess Menton with me this morning. Interior, what's like the VIX dynamic, the stuff you look at that I never look at?
Right. So the VVIX, so the vol of vol, which I know you wanted to weigh in on here. So not just what the VIX is trading, because we talked about that earlier, how it closed yesterday above 23. But if you look at the VVIX, so that actually closed yesterday close to around 119. So that would have been the highest level since December 20th. So that was right on the heels of the Fed's December rate decision. But if you look at that, I mean, that's still up close to about a quarter compared to its average over the past year.
Carl Weinberg's scheduled to be with us. Really looking forward to that with all of his international economics, particularly at Lehman Brothers a few years back. Thank you, Abby Joseph Cohen, for an extended conversation. From the Interactive Broker Studios, the Bloomberg Business Flash, Lisa Mateo.
And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. Well, we've got futures still pointing to a lower. Open investors looking at President Trump's address to Congress today. They're looking for any hints for future steps in his tariff push. Right now, NASDAQ futures down about 0.4%. Same for S&P futures. Dow futures off about 0.2%. The 2-year yield, 3.89%. That's down 5 basis points. The yield on the 10-year, 4.14%, and that's down 1 basis point. Stocks in Europe, they're retreating. Concerns it could be next to face U.S. tariffs. And in Asia, Chinese stocks mostly lower. We go to currencies. The Bloomberg Dollar Spot Index falling for another day, down about 0.3% because of the news flow. Checking in with the Mexican peso, down more than 1% right now. The Canadian dollar up 0.2%. And we go to the euro, up about 0.5%. That's as the EU looks to boost its defense spending. And when it comes to the automakers' tariffs, you have Jeep maker Stellantis down 3%, General Motors and Ford both down 1%, and Tesla actually down 4%. It also suffered another big drop in its China wholesales last month. And finally, Target saying tariffs among the reasons why it warned of pressure on profit in the coming months. Its CEO also saying it's going to cause some price hikes in the next few days, so be prepared. Things like fruits and vegetables, its shares are down about 3%. That is your Bloomberg Business Flash. Jess and Tom.
Lisa, thanks so much. We say good morning to all of you at 92.9 FM from Mount Katahdin down to Black Island. He got parchment off past the Wellesley Country Club at Babson College with John Hancock Investments. Matthew Miskin joins us this morning. Matt, what should our listeners and viewers watch in the fixed income market? I take great issue with following yield right now. Price is up big. Which full faith and credit item is Matt Miskin watching?
We're watching the steepness of the yield curve, Tom, and really what we're seeing is actually a bull steepener start to develop. And it's been a while. We've been waiting on this, but we're in a soft patch here in terms of the economic environment. We've gone from a reacceleration to an air pocket within months. But the bond market's acting like it should, and that's actually a pretty attractive place to be right now.
I agree that the dynamics I see on the Bloomberg screen are really pretty much normal. If I look at the 10-year real yield, what the pros look at, and that's come in from 2.20 to 2.00, and now a 1.78%. Where is the Miskin tip point where a lower 10-year yield really signifies some agony?
Yeah, I think you're starting to feel it, Tom. It's bad news is bad news world again, and the bond market is starting to price in weaker growth. And really, we're hearing all this, this could be inflationary, it could be weaker growth, but the bond market's telling you weaker growth. And really, that's why the 10-year yield is falling like this. That's a signal that the rest of the markets really haven't picked up on yet, but we think it's going to broaden out to other markets in time.
What is speculative positioning when it comes to the 10-year in the bond market in general telling us when you're looking at CFTC positioning?
Yeah, bond investors have been really negative. There's been a lot of negative sentiment around fixed income to end last year and to the beginning of this year. Is probably the most contrarian call was thinking about high quality bonds and the intermediate part of the curve into 2025. And the boat, everybody was on one side of the boat just a couple months ago, and now they're on the other side, or they're starting to come over to the other side, and we're going to have to see if this flips. But that's why the move in the 10-year has been so aggressive. You had to kind of be there before this kind of move, but there is still downside risk here. Our fair value estimate on the 10-year is more like 380, 390.
Wow.
Still more room to go.
And 390, I mean, actually the low that we would have seen in the 10-year was 3.6 in the middle of September, right before the Fed cut rates by 50 basis points there. So what would you think it would take? And usually you'd see the dynamic where when yields are falling, you'd see equities rallying like that, but we're not seeing that right now.
That's right. And that's a new development. The correlation between stocks and bonds are going more negative. So as a multi-asset investor, it's like, yes, finally, we're getting more diversification out of fixed income, which is a good sign for multi-asset and broader portfolios. But it's also, a sign that, hey, bad news is not good news anymore. And the fact that the 10-year is falling, the fact that the Fed's going to be cutting potentially 3 times this year isn't providing those animal spirits, that lift of equities. And that's the reason why it's different this time, is because the soft patch is more legit. GDP now tanking to 2.8% for Q1 is really catching kind of the bond market attention, and it's something that we've got to kind of grapple with here in the coming months.
Matt Miskin with us with John Hancock this morning. We say good morning to all of you on YouTube. Thank you so much for the worldwide attention to YouTube. I'm going to be focusing into April on India. we have a huge audience. I never understood this.
Yes, it's huge.
Literally on the other side of the world.
Yeah.
And it's like current and present. Good evening, I think. Good night? Yeah, I don't know. Good evening, good night. It's like George Clooney in a Morrow movie. Good night, good morning, good night, whatever. In India, on YouTube. Matt Miskin with us, and I want to make clear, as he mentions, the GDP Now number from Atlanta of a negative 2.8. Others are modeling migrating a little bit towards zero or even a positive statistic.
Well,
Jess?
speaking of India, you've seen Indian stocks post a historic losing streak on global funds, basically fleeing there, but they had been doing very well in recent years. And you were just talking, Matt, about animal spirits. At what point, when you see some of these contrarian indicators and sentiment, do you see start to pick up and start going back into some of the more riskier corners of the market?
Yeah, it's going to take some time. I think we're still cycle-based investors. We're amazing that this economic cycle has lasted as long as it has. And really, when we go back and kind of look at how did this cycle continue at this pace, a lot of it was government support. The fiscal side, just the taps never, or the floodgates of fiscal support never stopped really post-COVID. And now it's starting to really fade, and it's fading fast. And this jobs report on Friday, the government job creation is likely to slow. That has been a huge contributor to almost every jobs report. So if that weakness does manifest itself, that GDP Now might be more legit, and a couple weaker labor market reports would really underscore that weaker growth. Again, bonds look really attractive if that's the case.
Matt, one final question. With all of your experience, the zeitgeist I'm getting this morning is the Fed stands apart from this news flow. I don't buy it for a minute. Is the Fed engaged in the tariff debate?
I don't think they're engaged per se, but they are thinking that this could weaken growth. This could cause us to cut more. And this is why Powell and the whole team did not kind of reaccelerate Fed hiking right after or overreact on the first thing. And Tom, months ago, we talked about the knuckleball pitch of how this is all playing out from the fiscal side. And so, if they overreacted, they'd already be whiffing on the ball. They've got to be patient. But in our view, in the back half, they're back to cutting. And it's just been an opportunity to get higher yields for now.
Matt Miskin, thank you so much with John Hancock this morning. I've never done this. I just looked at it in Bangalore and in Mumbai. It's 7:38. There's a 30-minute differential here. But it's like an evening. Good evening in India on YouTube. We really appreciate the attention. They have statistics in all this. And it's amazing.
And they're tuning in.
Good evening. It's one of my great projects here into April. One of my other projects here is to have Michael McKee explain the Boston Bruins. That failed last time. He joins us this morning amid this mayhem. To pick up on our discussion there with Matt Mishkin, how do you suggest this is being taken in at the Eccles building? I mean, this is original stuff, Mike McKee.
Well, it's not completely original, which is the jumping off point for what we think the Fed is going to be thinking about at this moment. Trump put tariffs on China and other countries in 2018. We had the steel and aluminum tariffs, and the Fed staff did an exercise in which they modeled a couple of different ways for the Fed to respond. That was published in the Teal book, which is given to Fed officials. And since it's been 5 years, it's now public. And so we know what that advice was. And they gave them two choices, basically. You can cut rates because you think the economy is going to slow and you raise the risk of recession. Inflation will come down if the economy is slowing significantly. Or you can raise rates because inflation is going to go up. And they basically made the case that the best thing to do would be the first option, to look through the tariffs, because the price increase would be a one-time move in the price level, and it wouldn't be ongoing inflation. So that's their starting point, but they have to figure out if this is going to be a different kind of tariff and economic progression than the last time.
Educate us this morning. Matt Mishkin's brought it up. 3 other guests have brought it up. I got an Atlanta GDP Now number from smart people, and they model it out with plug and chug mathematics to a negative 2%, whatever gloomy number. Any number of sources, including Goldman Sachs, have said, we don't see that. We have a more optimistic cast on GDP here, above zero, and even, dare I say, above positive 1%. How can well-meaning people be so disparate on their guesstimates?
It's basically because their audience doesn't understand what they're actually doing.
Please explain.
The Wall Street houses are making forecasts based on what they think is going to be the economic outcome, what businesses are going to do, what consumers are going to do, et cetera. And they're using the inputs from previous quarters, et cetera. What the Atlanta Fed is doing is taking the data that come in quarter by quarter, month by month, and plugging them into the model and saying, if GDP were reported today with this data, this is what it would be. And so they're not making a forecast. They're giving you a point in time number. And we know, for example, that the reason they're so negative at this point was the big rise in imports that we saw in January, which came from people front-running tariffs. Now, if you buy a lot of stuff and are trying to build up your stocks to have it available, that's got to show up somewhere. But it hasn't yet because we don't have the inventory numbers yet. And the inventory numbers would then add back into GDP. So some of this negative 2.8 is going to go away.
Okay, that's fine. I mean, I got to bring Jess Menton in here only because she studied with Thomas Savings at Texas A&M and actually understands inventories.
To Mikey's point, I mean, because also I was looking at the consumer goods imports numbers, so they surged by nearly 26% year over year in January, so near the upper end of the historical range. But to your point, you were talking about potentially companies trying to kind of get ahead of some of the tariff type of issues. Is that the type of data that we're starting to see in it, or if it's not showing up in other areas?
We're seeing, those are the signs of how you would see people reacting, preparing for the tariffs. We have to see what retail inventories look like. We have to see what inventories at the wholesale. Well, wholesale inventories did go up, the first read we've had on that. We have to see what the factory inventories do, and they should, in theory, rise. Now, we've got one more month of this because the trade data are delayed by a month. So February may show the same sort of thing, which would even depress GDP further. But this is leaving out, we don't have consumer spending, we don't have business investment, we don't have the inventory numbers in these GDP numbers, so we don't know what they're actually going to be. And so a positive outcome is still probably very likely.
My sophisticated analysis, Mike McKee, is in the vicinity of March 14th. The government may shut down plus or minus a few days. Who knows? Who cares? The same day, far more importantly, we get the University of Michigan statistics, which I usually ignore, except all of a sudden, confidence seems to matter. How do you use the University of Michigan data?
Well, it's one of many inputs. I hate to sound like a Fed official. It's one of many inputs into what can happen with the economy. Recessions, as you know from your many years of study, Tom, are confidence events. Consumers lose confidence, they stop spending, businesses then pull back and they stop hiring, and that feeds into a downturn that turns into a recession. So if consumers are getting very losing a lot of confidence, put it that way, that could translate into a problem for the economy, but we don't know that it necessarily will. They could change their minds and come back and start spending again. Something could make them feel better about things. We've going to have a late Easter this year, so you may see in March, you may see spending pick up because people are buying their Easter bonnets and chocolate eggs. So at this point, it doesn't guarantee anything, but it's a bit of a worrisome sign.
Of course.
Well, go ahead, Jess.
Well, I was going to say this is the last week that Fed officials will be speaking ahead of the blackout period before the March 19th Fed decision. But John Williams from the Fed, New York Fed, will be speaking at the Bloomberg Invest Forum around 2:20 p.m. Eastern today. So what do you think the messaging around the Fed ahead of this blackout period is supposed? Are you expecting here?
I will be doing the questioning, so I appreciate the pitch there, and I'll send you a check after this is done.
Of course.
My guess is that no matter how hard I hit him, he's going to say, we still don't know yet.
Right.
But that would tell you something, too. If they don't know on March 4th what the impact of these tariffs are going to be. On March 19th, when there are further tariffs coming, according to the president, they're not going to be able to make a decision to move rates one way or another. Yeah. So this basically, I think, if he says, we don't know, we still have to figure it out, it's a confession that nothing's going to happen on March 19th. Now, what do they do going forward? We've seen in the markets today that they've priced in 3 rate cuts this year, but remember, it was not that long ago when they were pricing in none or one. Right. The markets will bounce around a lot as these things go on and as we get more data points.
And Jess, thank you so much for bringing that up. Without question, the conversation of the day for Global Wall Street, Michael McKee, with a gentleman always from the West Coast at the New York Fed now, John Williams, on the John Williams 2%. Quickly now with the news in New York City, Michael Barr.
Thank you very much, Tom, Jess, Lisa. President Donald Trump has imposed 25% tariffs on most Canadian and Mexican imports and raised the charge on China to 20%, effectively the $1.5 trillion in annual imports. Trump's move has prompted swift retaliation from Canada and China. China said it is halting imports of logs from the U.S. as well as soybeans from 3 U.S. companies. Bloomberg's Bill Ferries reports.
You saw the Chinese punching back very quickly with 15% tariffs and 10% tariffs on a range of U.S. agricultural goods, really going after some of the main products that they import. And then you saw Canada announcing about $20 billion in tariffs on U.S. imports and promising that they would go much higher in the weeks ahead if this tariff war continues.
Bloomberg's Bill Ferries. As for Mexico, President Claudia Sheinbaum said she will announce countermeasures on Sunday. President Trump has ordered a pause to all U.S. military aid to Ukraine, pending a good faith commitment to peace from Ukraine's leaders. Russia has agreed to assist the Trump administration in communicating with Iran on issues including its nuclear program and support for regional anti-U.S. proxies. The U.S. and Russia have discussed the matter, with Russia's Foreign Minister Sergei Lavrov sharing details with his Iranian counterpart. President Trump speaks before a joint session of Congress tonight. Bloomberg will carry the address live starting at 8 p.m. Wall Street time. Global news 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Michael Barr. This is Bloomberg. Tom, Jess, Lisa.
Michael Barr, Commerce Secretary Howard Lutnick over at CNBC said, quote, he doesn't know why cars sold in America should be built partly or wholly there in Windsor. Michael Barr, describe the traffic back and forth between Detroit and Windsor.
I don't know if you've seen the commercial, and it does air here in the New York area, of the Ambassador Bridge. That is a major thoroughfare between Canada and Detroit, and also the Detroit-Windsor Tunnel. So you get a lot of that going back and forth. People from Detroit go over to Canada to go in Windsor and play, and play in the casino and whatever.
Yeah, all the illegal stuff you used to do. Thank you to Secretary Howard Lutnick. Maybe he ought to come over here and have a tang with Michael Barr. So much going on right now. Still, the leadership of Mexico speaking. From New York, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by IBKR. Will U.S. CPI exceed 2.4% in March 2025? You can trade your prediction with IBKR Forecast Trader. The yes recently at 60%. You can buy yes or no and earn $1 if you're right. Go to IBKR.com/forecast. All right, we've got futures still pointing to a lower open. President Trump ramps up his tariff war with the nation's three biggest trading partners. Yesterday, the S&P 500 had its worst sell-off in 2025. S&P futures now down 0.6%. We have Dow futures down 0.3%. NASDAQ futures down 0.5%. The two-year yield 3.89%, down 5 basis points, and the yield on the 10-year 4.14%, and that is little change. We have spot gold, want to point out, up nearly 1% at $2,916 an ounce, but Brent crude down more than 1.5%, $70 a barrel. WTI crude now down $67 a barrel. Have to point out Bitcoin too, because it's down nearly 3% at just over 82,000. A few companies making news. Sycamore Partners nearing an acquisition of Walgreens. Its deal, well, that would end the drugstore company's run as a public company. Its shares are down about 3%. And Tom, this story caught my eye. Hopefully Kennel Fee and Vet Bill are listening, because hotels, they're going out to please their four-legged guests. The New York Times says a lot more are providing custom robes, bedding, toys, fresh cooked food, dog sitting walks, and even wilderness hikes for your little friends. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. That is your Bloomberg Business Flash.
Kennel Fee in his infancy was named after we had to put 2 dogs up for 5 days. Let's put it this way. They could stay at the Ritz and it would have cost us less money than the kennel fee. And I say that to the vet who really takes wonderful care of our dogs. She's at the Horace Mann Veterinary Clinic. You just write the check out for tuition to Horace Mann for the vet. We say good morning to Dr. Cantor here. Right now, this is important. We have Jean Bovin BlackRock with us, Abby Joseph Cohen, the experience and depth of experience of Carl Weinberg at High Frequency Economics in this time in peril leads to a 4-hour conversation. We don't have that. But what we do have is a morning note from Dr. Weinberg. Maximum anxiety kills economies. Carl, from where you sit with decades back to Stan Fisher and all of EM, will there be a messaging to the president to kill the maximum anxiety tonight?
Well, good morning, Tom. Jeff, thank you for having me on the program. I'm not sure the president at this point is sensitive to the anxiety that the business community and consumers are feeling. It certainly hasn't stayed his hands in moving forward with tariffs, although tariff threats by all accounts have been behind the decline that we've seen in investor, corporate and consumer confidence. So no, I don't really think that that anxiety is on the president's agenda right now, and he seems to sort of welcome it.
We look at, of course, what does it mean for across America, Canada, Mexico, yes, indeed, China, but I see Mex peso almost to a 21 weaker. I don't have a quote yet on Brazilian real, and on and on. With your experience, how do these big country tariffs redound over to the Pacific Rim, to Eastern Europe, and indeed to Africa?
Well, you know, there's a global implication of these tariffs. And we hear, I think the message to listen to is the message we're getting from our former friends, still friends for some of us, up in Canada, you know, which is that if the United States is going to be an unreliable partner, then we're going to try to sell our stuff elsewhere. And that creates opportunities for countries that are currently trading with the U.S., specifically Canada and Mexico right now, to expand their sales in other parts of the world to diversify away from the United States. And in my opinion, that's a potential loss for the U.S. economy.
That's something I wanted to dig more into, because which country has the upper hand to dictate prices? Because you're just bringing up Canada and obviously the ties to oil.
Well, you know, a lot of people miss the fact that countries have, generally speaking, specialization in the stuff that they export. So Canada has specialized in the production of certain kinds of automobiles. And if you want one of those automobiles, certainly for the next short to medium period of time, you're going to have to go to Canada to get them. And that means that Canada has a monopolistic market in the United States. The American importer is going to end up paying all of the tariffs on, say, assembled vehicles coming from Canada because they won't be available from any place else. So the incidence of the tax falls back on the United States because trade gives monopoly power to people abroad who make stuff for us that we don't make here anymore.
Carl Weinberg with us. We're going to get the markets open here, of course, on an important day, and then come back to Dr. Weinberg. Futures are negative 40-something, now negative 39. The VIX 24.08. To be cheerful, it's a little better tape than it was 30 minutes ago. Just plain and simple awaiting news out of Washington and the joint session speech tonight. The 2-year yield right now, 3.89%. The 10-year 4.14%. With the market opening from New York City, Lisa Mateo.
Yeah, and if it's any indication, futures have been pointing to a lower open all morning long. President Trump's tariffs take effect. So let's get right to it. We'll start with the S&P 500, down 0.8%, 45 points, 5,804. We go to the Dow, down 0.6%, 283 points, 42,910. And finally, over to the NASDAQ, that's down nearly 1%, 178 points at 18,173. The 2-year yield, 3.89%, down 5 basis points, and the yield on the 10-year 4.13%, and that's down 1 basis point. Have to point out COMEX gold up nearly 1% at $2,928 an ounce. We go to oil. We have Brent crude down nearly 1.5%, $70 a barrel, but you have WTI crude at $67 a barrel, and the Bloomberg dollar spot index down 0.2%. Because of the news flow, want to hit the Mexican peso down 0.7%. We have the Canadian dollar up about 0.1%, and even the euro right now up about 0.4%. That is your Bloomberg opening bell report. Paul, Jess and Tom.
You got that close, Lisa. Jess Menton with us today. Paul Sweeney, tuned up, ready to go with Alex Steele downtown. Carl Weinberg with us, who has the joy of working with John Sylvia, a contributor to High Frequency Economics. Carl, it's real simple. You say that if we affect this tariff structure, we could get a 1-year recession. You have the unemployment rate wandering out to the return to school of 4.8%. Are we ready for that rise in unemployment? How will the Fed respond? How would you suggest the president will respond?
Well, I'm not going to try to suggest what the president is going to do or how he might respond. He's clearly very unpredictable in economic matters. As far as the Fed is concerned, the Fed has 2 mandates, as you know, Tom. One is to keep prices stable, and the other is to maximize employment. And it's going to be in a quandary moving forward because prices will rise in the United States because of these tariffs. And they're going to rise by more, I think, than a lot of people expect. And that's going to urge the Fed to hold rates steady. Against that, we are going to see unemployment rise to the extent that the Fed sees that as its second mandate. It's more likely to hold the line on rates than to cut for at least a while, at least until the price increases work out. I just want to underscore this price thing for a second. You know, prices of stuff in the United States are going to go up other than stuff that's imported. You know, if you're a producer of softwood lumber in the United States and the price of imported softwood lumber from Canada goes up by 25%, you're going to raise the price of your product to match the tariffed price of the stuff that's coming in. So I think that the direct impact of these tariffs on prices is going to be relatively small, but the indirect effect is going to be large, and that could be unanchoring for inflation expectations.
Carl, we've run out of time. So don't be a stranger. Next time we talk eggs. Carl Weinberg with us, egg farmer up the Taconic, and also, of course, his brilliance on international economics. Jess Menton with us here as the market opens uglier than futures. Jess, we are negative 40-something on futures. SPX prices out negative 57.
I'm watching 57.83. That's where the S&P 500 closed on November 5th.
5 points away.
So that's right. We're getting very close to that level right now, to where it would wipe out those.
And what does that signal? Like
gains.
If we go through that, then we go lower? Is that
well, actually, that was the level that Bank of America was arguing would be a Trump put, but a lot of people have backed off on that because they're not buying it, because that would only be roughly 6% off of all-time highs for the S&P. Right now, the Nasdaq 100 though is down over 8% from its highs.
VIX here off 2 points, higher, I should say, by 2 points. 24.86, not to a 25 print yet, but we'll tell you when we see that. On the yield space, we come in lower yields. The Sweeney yield in 7 basis points, 3.88%. 10-year yield, wow, could we get a 3.99 10-year?
Wow.
Ian Lingen just nailed
He
it.
did.
I don't think he nailed it for the right reasons, but
Right.
Good morning to BMO Capital Markets, who've been looking at this vector with others for ages. A 10-year yield, 4.13%. Just what else? What do you see in foreign exchange right now?
So actually, if you're looking at the U.S. dollar to the Bloomberg Dollar Spot Index, that's something we're keeping a close eye on, just because you've had companies like Apple as well as Amazon warn of some of those currency FX headwinds. But right now, the Bloomberg Dollar Index actually a little bit lower now, and trading around 1.289.
Mexico, 20.86 now. Weaker Mexican peso. Please stay with us across the nation on your commute on YouTube. Subscribe to Bloomberg Podcast. It's Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks really getting beat up this morning as U.S. trade tariffs spark retaliation. Now, in the middle of all the concerns about the impact of tariffs, traders have added to bets on interest rate cuts from the Federal Reserve, seeing 3 cuts in 2025. So let's start with the S&P 500 down 0.8%, 48 points. The Dow down 0.9%, 410 points. And the Nasdaq down 0.7%, 144 points. The 2-year yield 3.89%, down 6 basis points. The yield on the 10-year 4.13%, and that's down 2 basis points. To currencies, the Bloomberg Dollar Spot Index down about 0.2%. Because of the new news flow, this chicken with the Mexican peso down 0.7%. The Canadian dollar up a 0.1%. We move over to the Japanese yen up about 0.5%. The euro up about 0.3%. To earnings, Target and Best Buy both warned customers expect higher prices because of the tariffs imposed to Mexico, Canada, and China overnight. So you have Target now down more than 4.5%. Best Buy down nearly 14%. Other earnings, AutoZone reported comparable sales for the second quarter that missed estimates. Its shares are down more than 1%. And leading the losses among the Mag 7, that would be Tesla, down about 3%. That is your Bloomberg Business Flash. Jess and Tom.
Lisa, thanks so much. Jess Menton and Tom Keene, Paul Sweeney and Alex Seal getting set up for our Bloomberg Invest series downtown. John Williams in conversation with Michael McKee this afternoon. I can tell you folks, and how long? I've been doing this 6-7 years, right, Jess?
Yes.
I could
well,
tell
even
you
longer than that, I'm pretty sure. But
I have never seen
go
a
with
set of TV screens like we see this morning. It has been of maybe 3, 4, 5 days spanned across over 2 decades. Understanding those 2 decades is Jay Bowen. He's president and CIO of Bowen Haynes of Florida. We like to have him up with sound thinking off of Chapel Hill and LSE. But today, his note is absolute required reading. Look to Bowen Haynes for that. I love it. The storm before the calm is how you put it today.
Right.
If I own equities, I hold them, and do I acquire shares this morning, as John Templeton would say.
Yeah, I mean, I think could there be a more perfect backdrop for a correction? I mean, all of this uncertainty is front-loaded that we've been talking about. Trade uncertainty, budgetary uncertainty, tariff uncertainty, tax uncertainty. It's all up front and center. And all of the growth stuff is backloaded. it's on the very distant horizon. I think it's going to materialize, and I think it's going to be, when we come out of this on the other end, I think it's going to be quite positive on a variety of fronts. So I view this as a classic, particularly at 22 times forward, it's a classic correction.
So what specifically would you be buying on this dip?
Well, if you're looking long-term and you're focused on a diversified portfolio, I would look at these areas that play into the fourth industrial revolution that some of them have been hit pretty hard. You've got stocks that are really selling into some of these high-growth industrial markets that are involved in the fourth industrial revolution. Particularly, we like to call them technology companies disguised as industrial companies. They're very high-tech oriented, although they might technically be called industrial companies.
Like what specific companies do you think?
Like a Corning,
okay,
or a Teledyne, or a Honeywell, or a Rockwell. I mean, some of these on the energy side, the GE Verona, they're very involved in a variety of fourth industrial revolution activities that I think is a major secular trend that is experiencing a pullback right now.
I know that you were arguing that you expect to see more of the stock gains, probably stronger in the second half of the year for the S&P 500. I know we're in the third year of the bull run, so typically you see things cool off in general. But when it comes to pro-growth that people are arguing, especially when it comes to Trump's policies, Bloomberg Intelligence was arguing that the tax cuts being eyed in Washington would only reduce the tax burden for the index by about half as much as the 2017 package. So what do you think that correlates to as far as earnings growth and what that means for S&P 500 gains?
Yeah, well, I think part of the correction that we're experiencing now is the first quarter commentary on earnings. The outlook was, we had a very strong fourth quarter, I think 12% on the earnings front, earnings growth. But the commentary coming out of the first quarter was very muted, and first quarter estimates have been trending down a little bit. So I think there's a lot of caution in terms of forward guidance. But when we get more certainty on the budgetary and tax front, and the tax front, not only is it the certainty that's required in terms of extending the current 2017 Act, but there are growth initiatives on the horizon that I think will become law as we move into the second half of the year, which will help.
Jay Bowen with us here. The S&P down a stick right now, down 54 points. Dow down 420 points. VIX 24.62. I just looked at John Deere. I think it's got a little bit to do with Mexico, Canada, our international economics. It's 5.3 standard deviations from the peaky exuberance down to where it is now. It's had a correction of 12 or 13% as well. Is the basic idea by quality, like Jess was mentioning, by quality that's been beat up? Or do you buy high flyers like Walmart with a model of 30? And, Walmart with a big pullback has got a PE. I got to get the symbol right, Jess. I'm new with the Bloomberg.
Actually, its PE ratio was trading above the Mag 7 cohort
40.
for a while.
Yeah, it's like do you buy quality that hasn't gone down, or do you buy something beaten up like John Deere?
Yeah, I think quality that has been beaten up, and I think as you know, I mean, the last couple of years, the S&P has done about twice as well as the equal weight S&P. I think it was something like 56% versus 32% for 2 years. I think that is going to go the other way the next couple of years. I think we've already started to see it. So you got a lot of high quality companies that, number one, are cheaper statistically on a variety of fronts, not only on a forward PE basis, but on a variety of statistical analysis. They look pretty intriguing. So I would focus on that part of it more, from a valuation standpoint, the quality.
We're going to have to run here. I'm sorry, but I got the news to get to. The news flow. Can you come back again? Take the Sikorsky up from Florida.
Absolutely. And then when you come down, we're going to go to Burns.
Okay. Yeah. Well, I wanted to do that.
You told me where you sat at the bar.
Excuse me. I've sat many places. I've sat in the bar of Burns Steakhouse and held court. That was good. There's some New York Yankees there. I even spoke to them. And then you go upstairs to the dessert floor, where they have the phone by your desk.
Doesn't get any better than that.
And your kid calls and orders 3 desserts at $28 each. Good morning, Burns, Tampa. This morning, Jay Bowen with us here with Bowen Haynes. A brilliant note. Look for that note from Bowen Haynes. Dow down 2,200 points from the peakedness of where we were.
Yeah, the S&P 500, 5.6% off of that all-time high. That
Is that a correction? I say no.
No, that is not a correction. No, usually.
To the Ute like you or Brockton, it's like, oh, it's a correction.
No.
To me and Jay Bowen, it's like, no, it's not a correction.
I mean, even the NASDAQ 100 isn't over 10% off of that high yet. It's still a little bit over 8%.
We'll have to see. The Dow, negative 431. With our news in New York City, Michael Barr.
Tom, Jess, Lisa, thank you very much. President Trump is pitching the theme of tonight's congressional speech as the renewal of the American dream. We asked Brown University political scientist Wendy Schiller what she'll be listening for.
I'm not planning to listen to anything in particular because I never know what Donald Trump's going to say. But this will be about, again, how he will negotiate deals that are in the better favor of the United States, how he has he's already doing what he promised to do, and that he's going to basically it's a campaign speech. And you're going to see a lot of Republican unity. This is what this is. This is a show. And this is also the president reminding the Republican Party that he won, that he brought them in, that they owe him, and they should stick with him. And this is a public display for that reason, going into very difficult, I think, tax cut and debt ceiling and budget negotiations in the next couple of weeks.
Wendy Schiller of Brown University. Our coverage of President Trump's address to a joint session of Congress begins tonight at 8 Wall Street time on a special edition of Bloomberg's Balance of Power. President Trump has imposed 25% tariffs on most Canadian and Mexican imports and raised the charge on China to 20%, affecting roughly $1.5 trillion in annual imports. President Trump has directed the U.S. to pause all military assistance to Ukraine as he seeks to pressure Ukrainian President Zelensky to engage in peace talks with Russia. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Jess, Lisa.
Michael Barr, have you ever been to Windsor Assembly? It's Stellantis Chrysler right now. You go across the bridge through the tunnel. You go back a little bit, and people don't understand. It's not just Red Rouge and Rouge and River Rouge and there's like factories right across the board.
Oh yeah, I've had to cover stories over there. So yeah, I mean this is going to impact the auto industry, especially in Detroit, big time. These tariffs.
Did you drive a town and country station wagon?
No, but my mother and father did, the size of Arizona.
There we go. The auto business we knew. From New York City, Bloomberg Surveillance.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
And finally, we get to the joint session of Congress. We've been all day on tariffs and a little bit in UK. Thanks to our guests. Just wonderful, wonderful perspective. Jess Menton saving me any number of times this morning. Paul Sweeney and Alex still coming up. But right now, David Gura, do the Democrats just sit on their hands tonight?
Well, it seems like they have been over these last few days. I think there's a lot of outcry over the fact that they haven't put more of a pushback on the policies that we've seen put in place and react more strongly.
Stand up and walk out? I need some theater.
I think there'll be some theater. We'll look at their reaction. In fact, I think the reaction is going to be more important here than maybe what the president says in substance. But we know that many of these Democrats are going to bring with them federal workers who have lost their jobs. So they'll try to make some statement, an optical statement, and I think we'll see it in how they cheer and how they boo over the course of the event as well.
What are some of the expected highlights from his speech?
One wonders what he's going to tout. The president's going to tout over the course of this. I think he's going to hit immigration pretty hard. I think he feels like he's done right by his base who voted him in on that front. I think he's going to address the latest tariffs news in a way that will not involve the word war. And I think he's going to talk about the economy as glancingly as he can. Of course, there's a lot of concern here about the fact that he made promises throughout his time on the campaign trail about bringing prices down on all kinds of goods, eggs among them. That hasn't happened yet. And in recent days, we've heard members of his administration floating the fact that there could be kind of a prices czar put in place. Again, I think he's going to stick kind of in broad terms to the fact that he's doing this. And, you know, the great X factor here is when does he take ownership of this economy? And I think Democrats are saying, look, it's high time he's done that. Maybe it's 6 months, 12 months, but we'll see if he gives any indication there of when he feels like he's fully assumed control of this economy from his predecessor.
Don Bacon, Adrian Smith, 3 Republicans from Nebraska. Adrian Smith won the GOP race out there. There's like 3 Democrats in Lincoln. That's it. Okay, so they won. He won by 74%. How do they respond to the complete blowing up of Nebraska agriculture?
Look, this is a huge issue, and Brendan Murray wrote a great piece about this.
He was on early.
Oh, sorry.
He got up before you did.
He lives in London, for God's sake. He was able to get up before I could. But I think that his point is a really good one. I think that there's a degree to which people can get behind the premise of let's bring more manufacturing back to the States. But when it comes to agriculture, as Brendan points out in his pieces, I'm sure he pointed out with you as well, farmers don't like lower prices on the goods that they're trying to sell overseas. And so as we look at the kind of retaliatory efforts put in place by China and other countries, it's going to be sobering this morning. It's going to be sobering when we get more detail on that. And certainly when we hear from Mexico's leadership on Sunday this week.
What about when it comes to mass deportations as well as the tax cuts?
Look, this is going to be, as most academic economists will tell you, a huge drag on the economy as well. And so I think what we're going to figure out here in the days ahead is how much does that kind of prognostication based on existing literature and how things have gone in the past actually play out here. But there's certainly a lot of grounds for concern among the people that I talk to and we hear from on this show and others about the drag that's going to have on the labor market in this country and what it could mean for the economy more broadly.
You started with the Democrats. Which is the one you're watching? Is it Mr. Jeffries? Is others? They seem, sort of kind of like invisible. Am I right?
They're more invisible than I think a lot of Democratic supporters would like them to be. But you bring up Hakeem Jeffries, the minority leader. Very interesting one to watch. I'll be watching him, particularly as we run up to this deadline for government funding here just a few days away. We've kind of forgotten about that, but we face this crisis of a government shutdown in the coming days.
To do it. What is the date here of quote unquote government funding?
That's March the 14th. And so we're going to see this 10 days. So I think after this speech ends, the president's going to take to the road as he often does. And I think it's for Democrats now to sort of lay out a plan for how they're going to fight back against this.
Is he going to get the same response taking to the road that the Congress people got in gymnasiums across this nation?
I don't think he's going to get it directly, but I think Republicans are, that this is just too much uncertainty being infused in the economy right now. And I think people are going to wonder, what's the end game here? What's the plan? And I think that's what we're going to see sort of figured out here in the next few days.
I got 20 seconds. Is basketball season over?
For UNC it is. Yes. For my kids, yes. We got some great playoffs games this weekend. Better for me, worse for them. It's over for this season. The Little League is right around the corner. So we're beginning to buy gear and make plans for that. Make plans and buy gear. I'd say the gear buying is the biggest thing.
Gear is very good. David Gura keeping the needle on GDP going. Thank you. And of course, look, tonight's coverage. Kaylee Lyons and Joe Matthews. Jess Menton, thank you so much for coming in.
Been a pleasure.
Today. I think more Texas music is in order. Casey, as they say.
Just like dust, we settle in this town.